possibility of the weakening on the euro side, as I explained, and I've shared some signal on the euro CHF on the previous live stream on Friday. So if you guys do follow our live stream, we will be sharing some signals if there is some things coming up good, so you guys can get some information as well. Okay, so I think from this currency pair sides, we will be looking closely for the pairs on the Japanese yen side, definitely on the Canadian dollar as well, because we are seeing that weakening could be persisting, especially coming out from the Swiss franc side after they decided to cut the interest rates towards 1% at 25 basis point cuts. Okay, moving on next to the stock indices, as you guys can see that the stock market on the US side is giving us some kind of mixed signals, where we are seeing Dow Jones close on a record high closes. Meanwhile, we are seeing the SP 500 and Nasdaq almost close slightly flat. But we are seeing the most notable gain coming out from the Asians of the government has really helped to push the prices of the Hong Kong stock market. Definitely, we are also seeing that impact coming out from the Nikkei side. However, after a victory from the LDP side, we are seeing that today's Nikkei stock market is almost down by another 5%. So I think I'll be paying a very close attention towards this top Asian indices. Especially, we are seeing Hong Kong is very bullish. Meanwhile, we are seeing that from the Japan side, it's started to giving us some kind of topping phases that we have experienced over the last few weeks. When we are seeing that on September, the past 2 to 3 weeks, we are seeing a lot of volatility moving up and down between the ranges of 37,000 towards 40,000, and we are seeing the possibility of that being a strong resistance for the Nikkei 225 and alongside other Japanese stock benchmarks, but we are not seeing a lot of those provided in the Forex platform, so we will be paying close attention towards the Nikkei 225 as well as the Hang Seng Index. Okay. Next, we will be viewing from the cryptocurrency market, where we always view this as one of the most risky assets on the currency pairs, and we are currently seeing a very clear sign that the market is having some kind of hard corrections, even though it's only a slight corrections, but it's varying from 1% negative towards 3%, but we are seeing some notable gains coming out from the Solana side that they are able to achieve a 1% plus. But overall, we are still seeing that the cryptocurrency market is close on a red zone for the closing of the week last week. Okay, so probably we'll be pay attention closely, because we are seeing that continuations from those risky assets spreading towards the gold market, silver market. I believe that is due to the unwinding of the Japanese yen trade, and it's still happening where we are seeing the correction has started on the gold side, silver side, and also from the copper side starting from today. And there's a possibility, even from what I'm seeing from the current prices of the cryptocurrency sites, we are also experiencing some weakening. So I believe that could be the reasons and the sources for today's decline. It could be coming out from the Japanese yen side because of that strength. But let's always look at the price actions, because the price actions will dictate where the market prices will be going for each of these currencies or each trading pairs. Okay, so I'll be reviewing what happened since Friday, and I'll be discussing and giving you some updates on what really happened on the Friday side, so you guys have a clue about what really happened if you don't really follow the news. So you will be getting updated daily. So if you guys want to get updated on a daily basis, you can definitely join us, and we will be sharing these updates with you almost every single day. Alright guys, so I'll be sharing with you that one thing is for sure, the global stock market is reaching a record high. Especially, we are getting the help out of the Hong Kong stock market from the Chinese stock market that really helped push up prices of the global stock market, with the Dow registered a record closing high on Friday as a subdued US inflation report lifted expectations of an outsized interest rate cut at the Federal Reserve November policy meeting. And these inflation data coming out from the Personal Consumption Expenditures Price Index, the Fed's favorite inflation measure, rose by 0.1% in August after an unrevised 0.2% gain in July, and economists had forecasted that the PCE inflation rising 0.1%. However, on a year-to-year basis, from 12 months through August, the PCE price index increased 2.2% after rising 2.5%, showing that tame of inflation started to slowing down on the US economy side. And we have seen from the US consumer sentiment continued to rise in late September, reaching a 5-month high on more optimisms about the economy in the wake of the Federal Reserve's interest rate cut. And as a result of the things happening on the Middle East side, we are also seeing that it helped to push treasury prices higher in a flight to quality bids, pressuring their yields. And we are seeing currently the yields on the benchmark fell by 3.5 basis points from a high of 3.79% late on Thursday. And we are currently seeing that the top news of the day, markets have started to fully pricing in a cut of at least 25 basis points at the Fed November meeting, with expectations for another upsize 50 basis points, now up to 56.7% from a 50% before the release of that inflation data. And Japan's ruling Liberal Democratic Party is in a narrow victory, with the victor a critic of the past of monetary stimulus, and said that the central bank was already on the right track for the rate hikes so far. And as a result of this news, against Japanese yen, the dollar managed to weaken by almost 1.8% to 142.17 yen to a dollar. And we also have the data coming out from the Japan side that consumer inflation in Tokyo eased this month after outgoing Prime Minister reinstated energy subsidies to help households cope with one of the hottest summers on record. Meanwhile, moving on to the Euro side, we are seeing that inflation in France and Spain plunged below 2%, fueling predictions by investors and economists that the European Central Bank will speed up the pace of interest rate cuts. And the Canadian economy also showed more signs of weaknesses that should keep the Bank of Canada cutting interest rate to boost their growth of the economy. And as a result, we are seeing the dollar index, which measured against the greenback of the basket of currencies, including the yen and the euro, was down by 0.17% at 143 after falling to 115, its lowest level since July 2023. So it's almost more than 1 year and 3 months, with the euro off by 0.14% at 1.116. Moving on to the commodities news side, we are seeing that oil prices rose higher on Friday, but fell on the week as investors weighed expectations for higher global supply demand against fresh stimulus China. And in also the other commodities news side, we are seeing that spot gold was down 1% at $2,643.88 per ounce on growing anticipations of further monetary policy by major central banks, and gold prices were headed for their best quarter in more than 8 years. So that's a very clear sign that the gold market is still in a very bullish market. It's still going through that strong uptrend that has been started since the end of 2023. Alright, so let us view from the last week key events, where we will be discussing about what really happened. We will be discussing about the Japan Tokyo CPI, as well as the US PCE, and also the University of Michigan consumer sentiment on Friday. As usual, this week we will be having some data coming out from the European side, from the Italy and Germany CPI, and we will also have something coming up as well. Okay, so if you guys see from this currency strength charts, we are currently seeing that Australian dollar managed to gain its strength for today against the weakest pairs, alongside with US dollar, Swiss franc, as well as the Japanese yen, because something has started to shift it on the market. As you guys can see, that we are currently seeing that the Swiss franc still weakens alongside with US dollar, as well as the Canadian dollar. But one thing is certain, that we are starting to see the weakening on the Japanese yen side. So we will be paying close attention to see whether these weaknesses could continue. But so far we are seeing that strength could still be continuing in the long run. Okay, so I'll be taking a quick look on it, seeing from the pairs that you guys are much more interested, which we will be covering more on the gold side. So before yesterday's downfall, I do share some signal on the gold side, definitely. Okay, so let me open up this to give you guys a much clearer signal of the market. Okay, so what has happened since yesterday's Friday? So yesterday Friday has been kind of a good closing, as we are seeing that uptrend is still maintained above the moving averages. So that's a very good sign for the market. However, we also started to see there is some good signs coming out of the gold market, where there's a possibility to be bearish for today, because we are seeing that weakening still persisting and happening on the currency side. As you guys can see, that we are seeing the possibility of the weakening of the gold prices for today. But unfortunately, as you guys can see, it seems that we have missed the momentum to do the short. Why I can say that for sure? Okay, so if I open up to the smaller time frame for you guys, so it's very clear that the market has been going through some corrections. That's right, that's very true. But one thing is also happening from that side as well. We are also seeing the possibility of the weakening could be started to reach its support level and started to rebound from here, reaching around here before continuing that downside. However, if you guys are short-term trader, if you guys are trying to do that short for now, it's a very risky move, because we are currently in the support area around the 2630 towards 2638, and once it reaches those price targets, there's a possibility it could rebound for a while, reaching around these prices at around 2650 before continuing that downfall. So for you guys to have a clearer look on it, I will be drawing something on it for you guys to have a clear idea of what I'm saying. So I'm seeing the possibility of it reaching 2650 before closing lower at around these prices later on. So there's a possibility of a rebound. So if you guys want to do that trade right now, I'm seeing the possibility of doing it on the short term, because on the long term basis we have missed that momentum of the corrections. We could have been doing shorts around 2665 towards 2650 for the best price actions, but currently we are already missing that window flight, so we will be giving you guys a much more short-term momentum base of those target. Okay, so if you guys do follow our live streaming on Friday, we already managed to gain a profit out of this trade, where we are considering to do a buy and reach the price target of 2670. And it seems that after the release of those data, it even managed to reach the price target higher than that. So I'm seeing that the price target actually reached towards 2685, the highest. So it seems that the price target has already reached its second price target. So if you guys do follow the signal and you guys think that the gold prices could be going higher, I believe that most of you guys would have been making towards the second profit target, which is around $14 of profit. So that's a huge profit margin, remembering that the day is closed on the red side after the day closes on the Friday's market. So that's a very good sign. So next we will be giving you guys that signal after discussing what really happened from our trading side from the live streaming sessions last Friday. So we will be getting a closer look on this side, giving you guys another entry signal for tonight. So this will be a low risk entry strategy, but it couldn't be a long-term movement. Okay, so I'm giving you guys the first signal for today, selling gold short term. So I'm not expecting it could be hold for the long run. And I'm seeing the possibility entry prices right now could be a good choice. 2635, definitely. If you guys could enter lower, it will be much better. Okay, so it seems that the low is around 2634. So right now you can enter around these prices, stop your losses at around the low of it, just to make sure that you don't really miss a lot of the actions, and you can aim for the target price 2640. That's 2643, and the second target price would be around 2,647 towards 2,650. Okay, so that will be just a short-term trade. That's why I'm just giving 2 price targets instead of the usual 3. Alright guys, so if you guys couldn't wait, then you can try to enter on it like right now. It isn't far away from our current entry prices. So if you guys are interested to do that short-term trading for now, since I'm not usually that accustomed towards the short-term trading momentum, so I will be much more adamant to do that long-term trade. But right now we are seeing the possibility of a rebound after reaching the lower part of the trend line, of that downtrend line, and there's a possibility of a short-term rebound. Okay, so that we are just utilizing that short-term rebound for this trade. Okay, so next we will be looking through silver prices. Okay, so for your information guys, because we are currently in an open live stream, so if you guys are interested to have a more interactive discussions with me, I believe that on top of your live, if you're joining us, there's a link for you guys to join directly on our website where you can have an instant reactions with me, so I can read your chats. Because right now, up until this moment, I haven't received any news whether you guys are following my live streaming, how are you guys doing, are you guys following what I've been telling you guys. I haven't received anything from my side. So if you guys want to get a more interactive discussions with me, I suggest, highly encourage you guys to click on that link for you guys to join our live streaming chat room, and you can have direct discussions with me, and you can ask me anything related to the trading side. Okay, so alright, since until now I haven't received any news from you guys. Okay, so let's get back to the trading charts. As you guys can see, that currently we are facing a very clear momentum that the market is currently facing a downtrend momentum, and one thing is for sure guys, because it's a downtrend, it's similar to the gold trend, we are expecting some rebound on that side as well. Okay, so you guys can see it's currently on the lower ranges, and I'm expecting it could reach around 31 to 31.4, the maximum price targets. But if you guys are interested on a short-term basis, I could recommend you guys to buy around this and sell around 31.4. Okay, so let me give you guys some other updates on the currency sides, since I've already given out some signals on these commodity sides. But definitely, if you guys are interested to trade on the silver side, I will be recommending you guys to buy on this side. Put your stop losses just below today's low at around 31.04, and put your price target around 31.4. And I believe that could consist a good trading risk and reward ratio of around 2. Okay, so there you go. I'm giving out this signal, but I'm just not writing it up because I believe that the price actions on the gold side are much better. Okay. Alright, so I will be continuing the live streaming sessions looking through the charts of the currency side. So as I promised, USD/JPY could be one of the most interesting pairs to look at for now. So it seems that what I've drawn the previous chart is gone. So let me check through the other trading pairs. Okay, so this is the one that I've been drawing and I've been recommending almost multiple times, that most of it I'm recommending a sell after reaching this lower side. But one thing is for sure, on the current trading side of the USD Japanese yen, it's very clear that the market momentum is still going lower. But after having such a huge corrections from around 146, right now the price is at around 142.5 yen to a dollar. It's very normal market reactions to see that it has reached a support and it could be giving us some rebound. Okay, as you guys can see, the overall trend is going upwards on a good long uptrend. before the Japanese government interrupted, and right now we are seeing the possibility of the weakening side of the Japanese yen. I mean the strengthening of the Japanese yen against most of the major currency pairs. Okay, so if you guys look closely what has been going on. Okay, everything is on track. Let me readjust this slide. Okay, there you go. So currently we are already reaching the resistance of this USD Japanese yen around this area. It's already similar to what we have drawn, and right now we are seeing the possibility of it to be able to stay away from that side and reaching on the lower side of this USD Japanese yen. And I believe if you guys do look at also on the other currency pair side, we are also facing the same thing. So for instance, if you look at the GBP JPY, after reaching the resistance on the high area, right now we are currently facing a support area. So after huge corrections, it's a very normal market reactions, and we are expecting those market movements to happen. So right now won't be a good time to do that short, guys. Just a notifications for you guys. If you guys are still shorting it, I hope that you guys should be consistent of your resizings and don't get exposed too much right now, because we are started to see reaching the support area on most of these Japanese yen pairs. Okay, as you guys can see, it's also reaching the support area around here. So just a notifications for you guys that if I'm not drawing a support line, it doesn't mean that the support line doesn't exist. It still exists. It's just to show you guys that support area could be anywhere. And right now we are seeing that after declining so much, it's a very normal market reaction to have that corrections. Okay, so it's much better to wait before you guys do that trade. Okay, guys. So I'll be showing you guys also through the other currency pairs to show you guys what has happened since then. So right now we are facing that rebound from the support for most of the currency pairs that is against the Japanese yen. So it's much better to wait before we are rushing towards the decisions to do that short. But we are currently seeing that weaknesses appearing on the New Zealand dollar, Japanese yen, and also we are seeing that could be happening on the Australian dollar side, as well as the CAD JPY. Definitely the most notable pair could be coming out from this Swiss franc Japanese yen, which is still having that red candle that could be possessing some good things for us to trade on it. So I will be paying close attention towards this trading charts on the Japanese yen side, trying to find a good entry point for you guys, but right now I'm not seeing anything clear on that side. Okay, so I will be waiting for my queue, waiting for that confirmations for us to enter the trade. But it seems that we have something coming up from the NZD Japanese yen. We are started to see that weakening side, so I think I will be recommending the Japanese yen side on this NZD Japanese yen. Entry prices should be fine. So if you guys want to enter the trade, you can enter the trade right now. Okay. Put your stop losses around 90.7. Trying to aim for the first price target at around 19.2. Second price target at around 90.1. Try to aim for 90 the last. Okay, there you go. I'm seeing that weakening on that New Zealand dollar side, and I'm recommending a sell New Zealand dollar Japanese yen. Okay guys, so let us continue on the probably the US dollar pairs. And I'm seeing that, let us try to have a look on the charts, because sometimes if you're looking through the currency strength charts, it doesn't really show you what has been going on. But on this overall view that we are currently seeing from this currency strength charts, we have seen a very clear directions that US dollar started to weaken, still trading around with some slight losses for today. But one thing, we could be trading against the pair such as USD-CHF, or we could also have been trading on USD-CAD. Okay, so we'll be looking closely at those trading pairs. USD-CAD first, guys. Okay, so it seems that after a huge decline on the USD-CAD, we are starting to see that it managed to rebound after reaching the support area around here. So as I've said guys, support area doesn't mean if I do not draw it, it seems very clear that the support will still be existing. It's just if you guys don't draw the line, you're not seeing it very clearly, that's all. But if we are currently seeing on this price charts, it's very clear that the market momentum for the US dollar is still gaining some strength after reaching the support area over the last 3 days. And right now we are seeing that momentum rebound. Before it could be continuing that declining, I think it should be reaching around 1.355 before it could continue that downtrend continuations. But right now we are seeing from the US dollar Canadian dollar side, it could be strengthening for a couple of days before reaching for a downtrend momentum, continuing that major downtrend line. Okay, it's already reached its price target around this, so let me just readjust it. So I've recommended for you guys to do a sell around this area at Thursday. So if you guys do follow our live streaming on Thursday, I hope you guys are getting lucky that if you guys are looking on what I've explained on this live stream, you guys do get the benefits of trading out of those signals. And USD-CHF is one of it. Even though I'm not writing the signal, but it's still the same thing, because I'm giving you guys a very clear trading plan. As you guys can see, you can open your trade around here. So this is the time when I'm explaining it, and put your stop losses just above this high, and you can aim for around here. And it happened in just a matter of 3 days. So from Thursday towards the end of Friday. So it's just a matter of Thursday and Friday. So it's 2 to 3 days. So if you guys are a bit late, you still guys could take profit on today. And you guys see it's a very clear market trend. It's still going downwards, even though we are still seeing some momentum rebound on the USD-CHF for tonight. We are still seeing the possibility of it to continue its downtrend momentum. But right now it's very important for you guys to find a good entry point. If you guys are still late, if you guys don't follow the live streaming daily, I think you guys have missed the best entry points. Right now it's the best case if you look at a shorter time frame and try to find a good entry point for you guys to trade on the short directions, because the direct current movement is very strong on the lower side. So if you guys are afraid to miss some of those market momentum, it's clear that you guys can enter the prices at around the current prices. I'm seeing the possibility of those weakening happening. Entry prices on the current market movement 0.84, to 6, Okay, so as I've said guys, if you guys want to get, please look at the gold side. Okay, so let me check on it guys. Okay, So as I've said, guys, so it should be a buy. Okay guys, okay, I'm getting that wrong, so it should be a buy. That's right. So sorry guys if you guys do missed out on those. I am actually giving you guys that it should be a buy. Okay, so it could be clear enough that it's a very short-term reward, risk and reward, and it should be a buy rather than a sell. Sorry, so that's my mistake from my side, guys. Mistakes could happen, but it's important if you guys do follow what I'm saying, then you guys should know what I have been recommending for you guys. And currently we are already even reaching the first price target. So that's why I'm saying that it's a short-term momentum basis, and right now it already even reached the first price target. Okay, so if you guys do make the trade out of it when I'm telling you guys could have been on a profit for the first price target. Okay, so if you guys want to wait for the second price target, you could do on two scenarios. First, you could have been holding it, all your positions towards the second price target, or you could have been also searching for slashing half your positions, meaning that you sell half your positions and hold the other half for the second price target. And remember that you can always raise up your stop losses just in case that anything move against that directions. Okay guys, so thank you very much for your notifications on that signal on the gold side. That's, I'm writing it wrong, it should be a buy, not a sell. Okay, alright, so I will be looking at the USD CHF. Okay, so it seems that the market has been moving, but it's alright. We can put the stop losses around here, 8449, and try to aim for the first price target at around 0.817. Second price target around 0.8. So currently we are already in a profit, guys. This signal has been executed. Currently floating profit. Alright, so I believe right now we are currently in floating profit for the US dollar CHF. And okay, so if you guys want to have a more interactive discussions with me, as I've said with you guys need to join that link on the above side. So I believe that you guys are seeing that link. So if you're clicking on that link, I believe that you guys could have been entering the chat room and have a live discussions with me, because currently I'm not getting that real feedback from your side. I'm just getting some notices but not real-time discussions with you guys. So it's very important for you guys to click on that link to have that instant real-time discussions with me. Okay guys, all right. Okay, so let us check on the other trading sites. USD CAD, could there be also some momentum? Yes, that's true, but I think I've recommended one, so let's not take too much risk against the same pair US dollar. Okay, so but maybe there's still some good opportunities coming out, so it's better to take a slight view on those other trading pairs rather than missing some opportunities on the other currency pairs. Okay, the direction is very clear. It could be heading for some corrections, but it is going faster than expected on the Australian dollar side. So I'm still very bullish on the Australian dollar. But currently, if you guys are interested to do that trade, I will be not writing the signal, but I will be giving you guys some positions on it. If you guys are interested to do that long, you can put your stop losses around here, try to aim around here. Could still give you guys a nice 2 to 2 risk and reward ratio, and currently if you guys open the trade right now, you guys could have been on a floating profit. As you guys can see that the open profit and loss right now is around, it's just a very small number, but definitely it's a good entry positions to do a buy rather than a sell for now on this Australian dollar and US dollar side. Okay, so that's why I'm saying it's very important for you guys to open any charts, see how the price action is reacting, and try to make decisions out of it. Okay, it seems that it was the same case on the New Zealand dollar side. Could be putting the stop losses around here, try to aim just around here for safety reasons. Yeah, so it's around that same kind of market momentum reactions right now. It's a very good thing to do a buy for Australian dollar, US dollar, New Zealand dollar, US dollar for now. Okay, so that's what I'm seeing from the current charts. It's a very good risk and reward entry for now, honestly speaking, guys. And let us look at the other pairs as well. Okay, so GBP USD. Okay, I'm not seeing a very good signs because currently it's still facing some, I would say, descending or ascending. Ascending, I believe it should be ascending. It's not a very good sign, but I hope this momentum could be continuing because I'm seeing the possibility of it to break up higher, even building up a bull flag in terms of the shorter time frame. But as you guys can see, the volatility is very high on this GBP USD, so that's why I'm not that confident, because as you guys can see, Australian dollar, New Zealand dollar, USD has already reached its previous resistance, the previous high, and that's why I'm very confident on those trades. But right now on the GBP USD side, I think I will be much more on the waiting side. But if you guys are interested to do so, you can try to enter now, put your stop losses below 1.337. But from my side, I think I will be waiting for a better entry point. Alright, so what else? USD CHF, we are looking at it already. So the last trading pair should be on the Euro USD, where I haven't been giving you guys that outlook on it, but it seems that the weakening of the US dollar is very clear. Even the weakest currency pairs, which is the Euro currency from what I am seeing, has even already started to rebound, even reaching the higher grounds, almost reaching that 1-year high, which is consistent with a 13-week high. So that's a very good sign. But I think from the short-term basis momentum, I'm not seeing any clear good signs for now. But definitely, if you guys are interested to do so, I'm opening up a shorter time frame. It seems that this could possess a good risk and reward entry ratio, guys. Okay. So if you guys are interested to do that trade, you can buy around these prices, put your stop losses just around 1.1179, and try to aim for a target above this. So I'm expecting around 1.121, yeah, so something around those area, but I'm not that confident. But I'm seeing the high possibility of it to get that reward from the Australian dollar side, New Zealand dollar side, and also the USD Swiss franc side. Okay, so I'm seeing that possibility is much better on that side. Okay, it seems that even the currency started to changes its direction, so that's why it's very clear if you guys need to have a good entry point on almost all trading sites. Okay, so right now from what I'm seeing, we are currently in a very small floating profit, so I won't be giving you guys that note, but one thing is for sure, that trend is still very clear. It's still going lower. Okay, so even this open long positions on the Euro USD has even started to give you guys 2 pips, I believe. So it could be a good trade, guys. Okay, so I'm just not writing a signal, but from this you guys can see what I'm sharing. Put your stop losses around here, buy around here, target price around here for the Euro USD side. And also that's the same thing for almost all the other currency pairs, such as the Australian dollar, USD, the NZD, USD as well. So it's the same thing, guys. So I think I've shared much of the signal for tonight, so I think I won't be recommending too much, guys, because I also will be diving into the fundamental side of what is happening and what I can be giving out as a good opportunity on the long run, and what can we do on those trades. Okay. All right, so let us get back towards the lesson side first. All right, guys, so hang with me for a moment, and I'll be reviewing back on the charts. If anything happen on the charts, you can let me know by joining that chat room, so I can know that you guys have any feedback for me. Maybe I'm doing some mistake like just now, so if you guys do follow that chat room, I can read your feedback instantly. All right, guys. Okay. So why I'm sharing you guys the event, what happened, and how can it help you guys to trade? Okay, so it's very important. So for instance, if you guys want to buy a car, or if you guys want to buy a phone, what should you guys do? You should research of what you're going to buy. So let's say if you're going to buy a car, you need to find out what type is the car, what is the usage of the car, what is the benefits of buying a car, what is the losses if you're buying a car. So it's the same thing for trading, guys. So if you guys want to trade USD Japanese yen, you need to know what happened on that currency side. So that means you need to know what happened on the economy side, you need to know what happened on the US side, you need to know what happened on the Japanese yen side, to get much more of confirmations and have that confidence to do that trade on the long run. So that's why if you guys don't do that research, or don't get up to date on what happened on the news sites, I mean, the news site is important to notify you, but you need to deep dive into it and know what really happened for you guys to have that confidence to trade. So it's not just about reading the news, but what it is to understand on the event. That is the most important thing. Okay, so with that, I will be starting today's lesson side on the Tokyo side, where we are actually seeing that Tokyo inflation were quite lower from the 2.4 to 2%, as the outgoing Prime Minister has already reinstated an energy subsidies to help households cope with one of the hottest summers on record on Japan, where we are seeing that consumer prices excluding fresh food rose by 2%, the slowest pace since May, and a gauge that also strips out energy prices will stay down at 1.6%. And we are seeing that the overall inflations even go down from 2.6% towards 2.2%. And the results of this lower inflation side is due to the result of the slowdown in the electricity and gas prices that really help the decelerations of the inflations, where we are seeing the government measures help to knock down 0.5 percentage point of the overall inflation rate. And Tokyo inflation is a leading indicator for national price trends. And the very reason that the government is giving out subsidies towards the Japanese citizens, as you guys can see, average temperatures hit record highs this summer, prompting authorities to issue heat warning alerts and urge residents to keep their air conditioners running. So that's what really being the factor for the Japanese government to roll out that subsidy. And the outgoing Prime Minister decided to reintroduce subsidies for utilities from August to October, after his approval rating sank below 30% amid simmering voter frustrations over persistent inflation. However, we are also seeing that the BOJ highlighted that the month's importance by noting that service prices are often revised in April and October, and we are seeing that service prices in September rose by 0.6% from the past 1 year earlier, slightly slowing from 0.7%, showing that the overall inflation started to slow with the temporary strength on the Japanese yen side. And this slower price growth caused by temporary factors isn't likely to deter the Bank of Japan from conducting a rate hike later this year or early next year if conditions allow, because Friday's data will support the government's view that there is no need to rush with any moves. This week, that upside inflation risks have receded after the yen posted recent gains, as I've mentioned just now. And the BOJ is expected to stand hold when it next sets policy on October 31, where they will be deciding just to hold the interest rates as the officials have multiple times mentioning that they will be just holding the interest rates until the end of the year and probably deciding it on the December meeting if the data inflation has been kind of worse or that outlook has achieved what the BOJ deemed as a good time to hike interest rates later on. As you guys can see in these charts, we are seeing that the data has been showing us a very clear signs that the Tokyo CPI inflation has been going down. As you guys can see, the inflation trend is very clear. It's going down right now, so it's very good signs. But overall inflation is still quite high around this area, so I'm expecting it could be going lower later on. Okay, and as a result of this, the yen reversed losses and surged against the dollar while Japanese stock future fell after former Defense Prime Minister, a 67-year-old party veteran, served at several senior roles, is seen as supportive of the BOJ's plan to gradually hike rates, has warned the leadership of the nation's ruling party, beating a rival who opposed interest rate hike. And with the LDP election out of the way, the market is now shifting its focus to narrowing the interest rate gap between the US and Japan. And as a result of these both news inflations and the LDP elections, we are seeing that the currency strengthened as much as 1.4% to 142.8 yen to a dollar on the news after weakening as much as 1.2% earlier on Friday. Although the Bank of Japan is independent of the government, speculations of political pressure on the monetary policy had seen currency traders betting on the election result. So that's why we need to look at this as well. And as a result, we have seen that futures of Japan's benchmark 10-year government bonds slump, pointing to the prospect of the higher yields on the Japanese government bonds. And we are seeing that Nikkei 225 stock blue chip gauge slipped by 3.2% on Tokyo. And before that, the underlying Nikkei closed 2.3% higher, surpassing its level on July 31, the day the BOJ started a historic equity rout by raising rates. So after reaching that high around 39,829, right now even we are still seeing that the Nikkei is down by another 5%. So the strengthening of the yen definitely would help to lower the Nikkei 225 prices. So I'll be giving you guys that small outlook later on. As you guys can see on these charts, we are seeing the yen rebound so strong after a weakening of 1.2% from 145 towards 146.5, and afterwards we are seeing that strengthening from the Japanese yen side, and right now we are even seeing the currency sides are weakened, even strengthening on around 142.7 to 143, meaning that the Japanese yen strengthening is still continuing its momentum to down. Okay, so let us view back on that currency side and see what has been happening. Okay, right now this trading signal still works, so you guys could have been trying to aim for the second price target by, I've given you guys two scenarios: hold half your positions, take profit half, or keep holding on and try to reach around that second price target. Okay, and remember, always put your stop losses just in case anything moved against that directions. You can still aim for that profit if you're not looking at the charts every single minute. Okay, so USD Japanese yen. So this is the main feature for tonight, and as you guys could have seen, currently we are seeing that the USD Japanese yen still maintain its strength around that support, so that's why I'm not recommending any sell signal. But I think one thing is very important from now is we are seeing that weaknesses still persisting on the Nikkei stock market, guys. Okay, so that's why I'm saying that anything is correlated from one another to another side, because with the strengthening of the yen, it will definitely help the weakening of the Japanese yen market. I mean, the weakening of the Nikkei 225. So if you guys open up on the longer term trade, I think I've shared this view on the market where I'm seeing the possibility of an inverted head and shoulder over the past few months on this live stream. So I've been sharing this outlook almost multiple times that I'm seeing the possibility of the weakening of the Japanese stock market. If in the case that the Japanese yen still strengthen on its own, and this is also happening right now. After reaching that high at around 39,900 at its highest level, we are seeing right now it has already been closing weaker by almost another 5% just now. Okay, so I'm expecting that this trend could continue, building up this inverted head and shoulder. And there's a possibility that this trend could continue. And I think I've previously shared the signal where you guys could have been shorting the Japanese yen stock market, but it seems that that trade has failed, and it should have been triggering that stop losses around these prices. But right now, we could be re-entering that trade, but I will be looking for more confirmations, because in terms of risk and reward, that's a huge gamble. So I think I won't be giving you guys that sell signal, but my overall view on the market is still very clear that it should be heading lower on that side with a note. Okay, so with a note that if the Japanese yen keep on strengthening, then in the next few weeks, in the next few months, I'm seeing the possibility of this forming that inverted head and shoulder could be happening and eventually reaching this price target at around these prices. Okay, so that's just giving you guys some outlook on the overall stock market on the Japan side. But right now won't be a good time, because in terms of risk and reward, that's a huge gamble to take. Okay, so right now won't be the good time to trade on the Japan stock market. Alright, so I'll be moving on, trying to see from the other currency pair sides to see is there any other good trading pairs against Japanese yen. But from my current view, I'm not seeing any good signs on that. Even the Swiss franc started to strengthen. Okay guys. Okay, so from my view, I'm not seeing any good signs to sell the CAD Japanese yen or any other currency Japanese yen for now. So it's better to stand hold and wait for a good market opportunity to approach our trading side. Okay, even right now after sharing that signal, it even started to push back higher. So probably I'll be giving you guys an updated stop losses just to minimize your losses. So I'm giving you guys that updated stop losses around 19.63. Okay, I'm adjusting it because right now I'm seeing the possibility of that to rebound. Okay, so let us check back on what I've shared. USD CHF, I believe. Okay, even this currency pair side even started to rebound, so that's why I could be changing my stop losses just for you guys to minimize your losses, because it's very important for you guys to protect your capital. Alright guys, so I'll be taking a close look on that, and let's move on to the next lesson. Okay, so what happened on the euro side and what it could be interesting and what it could react on it later on. Alright, so on the euro side, we are seeing the inflation started to weaken, meaning that it could open up the room for a further interest rate cut of the European Central Bank side. And what that could mean for us? That means that there's possibility of the euro currency weakening and the possibility of the strengthening the European stocks, just for the short term, because I'm seeing that the European economy is not doing well. Okay? But before that, I will be sharing what I've discovered, and let us go on through it first. Okay, guys? So as you guys can see, there is two data. Maybe you guys can get confused, it's very normal. Even when I'm writing this up, I could get confused for a moment before really getting the truth out of it. As you guys can see, French YCHpro is the data out of the European harmonized inflation side. So on the overall European French side, we are seeing that inflation will weaken. As you guys can see, consumer prices weakened towards 1.5% from the previous 2.2%, and sinking below 2% for the very first time in more than 3 years. And it's mainly due to energy costs. Okay, so that is the main thing. That is the main thing that is keeping recurring across inflation data from Japan, from Canada, from Australia, from US, guys. Okay, so I'm seeing that a lot of inflation prices is going down due to energy costs. So if you guys do look and pay attention to the news, I believe that you guys could have paid attention towards that pattern. And in the monthly comparisons, price declined by 1.2%, which is the biggest drop since at least 1919. As you guys can see. And inflation measured by France's own consumer prices, which is the French CPI, rose by 1.2% from the previous 1.8%. So that's a very good number out of the French side. Meanwhile, on a monthly basis, it was reported down to negative 1.2% from 0.5%, showing that inflation is slowing down, showing very good signs that what the ECB has been looking for. And the explanations of what has been happening on that side is much better, guys. Okay, so as you guys can see, service prices has even started to rose just by 2.5% compared from the previous month, 3%. So that's a very good thing. Prices for manufactured goods declined slightly faster than in the prior month, showing that good signs as well. And on the consumer prices side, on the French side, we are seeing that it was due to lower energy prices, along with seasonal cuts in transport and accommodation costs, and return of normal tariffs after the Olympic side. And even a lower healthcare prices, marking the steepest monthly decline since 1990. And even the French National Central Bank predicts inflation in France will slow sooner towards reaching 1.5% on average after 2.5% this year. And after this morning data, markets boosted back on another quarter point reductions in rates on October 17, meeting an 80% chance of such a scenario, and the euro fell on the news before pairing losses, and it traded around $1.165 to a euro, down around 0.1%. But we will be also continuing with another site, which is we will be explaining on what happened on the Spanish side, because we have both French and Spanish data inflation presented on the same day, Friday side. But it's very clear, both of them are showing some very convincing and a very positive sign where inflation started to fall below 2%. So that's a very good sign, guys. Okay, 2% is very good signs, and it's currently slowing down, even going lower, even from the French side and Spanish sides, reaching almost 1.6%, 1.5%. So that's a very good sign. Okay, guys. Okay, so I will be also explaining on that Spanish sides. So hang on with me, guys. I will be looking through the charts on you for the Euro USD, Euro CHF later for you guys, okay, after this, and also the European stock market. Okay, so stay tuned and don't miss on that. Okay, as you guys can see that the Spanish YCHpro data, so it's similar with just now with the French side, showing that it was down to 1.7% on fuel and power and food. So a lot of factors really helped to drive down the inflations on Spain's side, and it has an expected reading of 1.9% for each country. And compared to the previous month, Spanish price edged down by 0.1%. And a separate ECB survey has shown consumer prices to rise more slowly over the coming years, and Spain's preliminary CPI data came in at 1.5% from the previous 2.3% in August, and also on a monthly basis it was reported down to negative 0.6% from the previous 0%, showing that inflation on the monthly basis and the yearly basis is almost down by another 0.6% towards 0.8%. And this surprise in decline in the inflation is mainly driven by falling energy prices and electricity costs. But food prices is also declined compared to September. So a lot of things happen, but one thing is for sure from this side. It has been showing that inflation has been going lower and lower on the second and the third biggest economy, the fourth biggest economy in the European side. And as a result of this data, there's a huge bet on bigger and faster ECB rate cuts surging this week. And you guys can see the projections on September 20 on the black line of this graph, and on September 27, a lot of things has changed based on that projections, and that newest projections outlook has been showing you guys that European Central Bank could be cutting interest rates faster and even bigger at a possible maximum of 180 basis points from a previous 160 basis points. That's a difference of 20 basis points. Then that could help to weaken the euro currency later on. And the ECB has lowered twice this year, signaled further reductions without giving precise guidance on the timing, because a lot of disappointing indicators on the economic side and pay increases in the second quarter have fueled speculations that officials could lower borrowing costs when they meet in less than 3 weeks instead of waiting until December. And this is the explanations of the further data of the survey side. But it's one thing is very certain: people are becoming less pessimistic compared with 1%, and unemployment rate expectations dropped to 10.4 from 10.6. Nominal incomes rising, that's a good thing. Nominal spending growth rose to stable at 3.2%. Consumers expect the price of their home to increase by 2.7% over the next 12 months, up from 2.6%. Expectations for mortgage interest rates at 4.8%. All of these data are showing that people are becoming less pessimistic on the economy, showing some signs of small good optimisms on the European economy, even though there's a huge chance of a further rate cut on the ECB side. Okay, so with that, what can we do with that numbers? Okay, it seems that I have one slide related to the European side. But before that, I will be having a look on the charts, see what has been going on. Okay, guys? Alright, it seems that the gold prices still managed to maintain its rebound, but it seems that signs of weakening started to happen. So there's a possibility that after reaching the first price target, it couldn't further go higher. Okay, so that there's a possibility of that. Okay, let us check on the other side. Okay, I believe it has reached its stop losses, so stop loss triggered. So we are transparent about the signal that I've shared, and if stop loss is reached, I'll be open with it, because stop losses and price target are a very normal theme and a reoccurring part of this trend. Okay, so let us check the last part. It could be reaching higher and higher, and maybe I could be even readjusting the stop losses to protect your capital less. Okay. All right. So as you guys could have seen that right now the US dollar Swiss franc started to gain some of that rebound momentum, but I'm still seeing that signs of weakening happening on that side as well, guys. Okay, so we will be continuing that side of the trade and try to put on that trading plan going on. Okay, guys. All right. So I will be continuing on the Germany news side. So right now we are receiving the data out of the German side, where we are seeing the unemployment rate is actually up from the previous 2,000. Right now we are seeing 17,000 is getting unemployed, where we are still seeing the Germany unemployment rate is at still around that same percent, at around 6%. And one thing is for sure, that there is some signs of an economic rough patch having an increasing impact on the labor market. And German companies have been reluctant to cut staff despite softer demand at home and in crucial export markets. And that's partly because of widespread shortages of skilled staff that make it harder to hire workers in an economic upswing. And employment has been growing at a slower rate, so that means that people are still getting hired, but the number of vacancies even fell by about 15% in the second quarter from the previous 3 months. And business surveys by SP Global and the IFO Institute this week also showed an increased willingness among firms to reduce staff numbers. So everything has been showing that a lot of people have been trying to cut their staff, but they are trying to not cut too much because they are afraid to lose some skilled staff along the way for that further cuts on the staff side. So that's why we are seeing the unemployment rate hasn't been changing a lot, but we are still seeing from the number side it has been weakening by quite much, and even unemployment is faster than the forecasted side of around 13,500 jobs. And as you guys could have seen from this chart right now, we are seeing the possibility of that unemployment rate could be going higher and higher, because we are seeing that continuing signs of the unemployment side from the 2022, as you guys can see from this high. And right now we are seeing the possibility of the unemployment going higher and higher, even reaching the high at around 6.4%, which is the peak at around the COVID-19 pandemic at 2022 side. Okay, so I'm seeing that weaknesses existing on that side. I'm seeing the possibility of it that happening, and what could it impact on that Germany stock market. So if you guys are from European, you can let me know about that, and I'll be looking closely on that side if you guys requested a further more updated side. Okay, so with that, I will be looking through the stock market side for you guys. And we'll be looking first on the DAX side, and later on we'll be looking through the European stocks of the 600 biggest companies. But one thing is very clear from here, we are seeing the possibility of the last leg of the rally after building that sideways over the last 4 to 5 months, starting from March, the end of the March, and right now we are seeing that accelerations, even though we are very clear that the market momentum on the economy side of the Germany is not very well, but we are seeing that the Germany stock market has been able to rally itself over the last few days, and that is a worrying sign, because that is a disconnect between the economy and the stock market side, and we are seeing the possibility of that weakening to persist. Alright, so one thing is for sure, let us redraw that trend line. It is still between that trend line, so if it managed to break down of that trend line, there could be a possibility of a weakening side of that, and we could probably even start to do a sell side on the DAX once more from the previous side, even though we just managed to reach its first price target. But no worries guys, we can always try to find another opportunity and try to do the trade on the other time, on the other momentum trade. But it seems that we could be probably seeing on this side there is one more chances to do the sell, even though right now we are seeing that the prices are reaching record high prices, but we are seeing the weaknesses in the economy. Doesn't even make sense that the stock market on Germany side is going higher and higher. Okay, I will be giving some short recommendations later on from this side, but right now it doesn't seem possible because we are seeing a very strong uptrend. It doesn't make any sense to do that short, and there's a huge possibility of it reaching the stop losses easier than before after breaking that sideways trend. And right now we are seeing that accelerations on that side. Even though it's a possible the last leg of rally, we will be waiting to get that confirmations before rushing to do that decisions. Okay, so we will be looking through that Euro stock market, the stocks. So this is the biggest 50 stock market, the biggest 50 European companies, and right now we are also seeing the same signs and the same fate alongside with the Germany stock market, where we are currently seeing that the topping phases are still forming on that side, and we also see the possibility of that weaknesses could be continuing as well. But right now, as I've said, it's the same case on the Germany stock market as well. We are breaking out of that sideways, even started to break and build a new uptrend line. So I will be waiting for much more confirmations before doing a short signal on this European stock market. Okay. All right. So it seems that our gold signal has still been doing fine, doing okay. So just let the plan work on its own, and we'll be looking through the other signal that has been running, the US dollar CHF, and seeing that it's still running. And a possibility I will be readjusting that stop losses, but it's just near of that, so I think I won't be readjusting it, but let us see how long it could run on its own. And probably we'll be checking on the other currency pairs since we have triggered our losses on the NZD Japanese yen. But we are currently seeing that if you guys do follow what I'm sharing on the Australian dollar, US dollar, New Zealand dollar, US dollar, as well as the other side, I believe that you guys could be in a small profit, floating profit for the Australian dollar side, US dollar, NZD USD. It's even a smaller profit, but it seems that we can see that the Australian dollar has managed to retain its strength. Euro USD could be probably one of the case, but it doesn't seem to make any sense because we are currently seeing after that review from that European news, we are seeing the possibility of the euro weakening, but let's keep in mind that there's a possibility that the Fed rate could be cutting another 50 basis point rate cut, and ECB could be delivering faster and bigger back rates. I'm seeing the possibility of it just rebounding around this high before even continuing lower, and especially if we are waiting and looking at the possibility of reaching the resistance multiple times before heading lower, there's a huge chance of that happening as well, guys. Okay. So that's why I'm seeing the very importance for us to keep a close mind and open mind that it could be probably reaching the high and then building that resistance alongside over the last few weeks. Okay, guys. So that's why I'm seeing the possibility of that happening, and probably this scenario I will be just deleting it because right now I'm not seeing that chances to happen, and right now we are even reaching the near resistance line that has been built on the closing of the 23 August, and even started to even breach down of that lower line at 1.1888. Okay. Alright, so I'll be continuing with the lessons because I think I have shared enough signals for you guys, and I'll be just let it to run on its own. And if you guys have anything to ask me, you can join that chat room so I can read what have you guys told me, because I'm not receiving that real-time notifications from you guys, and I couldn't be answering any of your questions or any of your feedback regarding the signal that I've shared or any outlook on what you guys could have been asking me. Okay. Okay, it seems that from the silver side, it also even reached that 31.4 signal that I've shared. If you guys are interested on that trade, I'm sharing with you. I'm telling you guys, I'm just not writing those signals. I'm already telling you guys that there's a possibility of it to reach that 31.4 site before heading lower later on. So I'm not writing it, but I believe I've told you that if you guys want to do that short-term trading, it's similar with the gold side. Buy around here, put your stop losses just below 31.0485 and put your target price at 31.4, and I believe it has already even reached that high at 31.4. So both gold and silver signal has been doing very well for us, but unfortunately from the currency side we are not seeing any good signs from that side, and there's a possibility of it reaching that stop losses side alongside this US dollar CHF as well as the NZD Japanese yen. Okay. So make sure that you guys don't overexpose yourself to one trade and try to keep your trade, because trading is a marathon. It's not a short-term game, it's a long-term game. Even though you're a short-term trader, but make sure that you have that long-term goal of growing your account, not growing it on one single trade. Alright guys. Okay, so I will be talking about the US side for now, since my live streaming time will be over in just another 10 minutes. So I'll be reviewing on what happened on the US dollar news side, on the economy side, and we are actually seeing from this slide right now, and what could it impact on the stock market of the US side, and also the US dollar currency side. And we are seeing from this slide, we are seeing a very obvious signs that inflation has been started to going lower, as you guys can see. On a yearly to yearly basis, it was up by another 0.1% from July, and on 3-month annualized basis, it was rose by 2.1% in line with the central bank's target. And in August, the PCE index rose 2.2%. Okay, so for you guys not to get confused, I will be highlighting it. So this 2.7% is the data on the US core PCE, where we are seeing that core personal consumption expenditure 2.7%. On a monthly basis, it was up by 0.1%. So this 0.1% is 2.7% deduct by 2.6%, showing that 0.1%. And on a 3-month annualized basis, it was rose by 2.1%. This data isn't shown here, but in August, the PCE index rose 2.2% for this data on a year-to-year basis. So the PCE is not the core PCE. So the core PCE is from the above data. The PCE index rose 2.2% from a year earlier and rose 0.1% from the previous month. So we are seeing that inflation on the PCE side has been lower, but from the core PCE side, it has been stronger. So it's giving us kind of a mixed signals, but we'll be getting later on it as well. But we are seeing that because spending also rose by 0.1% after adjusting for inflation, which means nominal personal income rose by 0.2%. How do we get that data? Because we are seeing from the monthly to monthly basis, the inflation for 0.1%. So nominal personal income will be around 0.2. If adjusted for inflation, it will be just around 0.1, because 0.2 deduct 0.1 equals to 0.1%. And even the saving rate is to 4.8%. As you guys can see from this graph, we are seeing very clear signs that even US core PCE started to rebound after reaching its support area at around this area, and right now we are seeing that rebound happening. Okay, so what has happened? Because the Federal Reserve preferred measure of underlying US inflation, spending rose modestly. So both household spending and the US core PCE data growing, meaning underscoring a cooling economy, meaning that the economy is still doing okay, guys. Okay, and the details of the August inflation number showed a broad cooling. Services price excluding houses and energy rose 0.2% for a second month, and goods prices minus food and energy declined 0.2%, showing that service prices itself is still rose 0.2%, and goods prices started to decline minus food and energy. And the spending data also points to an economy that's gradually slowing this year, because we are seeing that spending from 0.2 slowing down from 0.3, and the overall services spending, which makes up the bulk of the household consumption, rose 0.2%, marking the smallest 3-month gain since October 2023. And meanwhile, goods spending were unchanged after a solid advance in July. Wages and salary rose by the most, so that's why inflations were quite high, because we are seeing that wages and salaries still rose quite much, and growth in the overall disposable income slowed, restrained by declines in proprietors' income, interest income, and dividend income. And as a result of this news, we are seeing that treasury yields and the dollar fell on the expectations that the figures will keep the Fed on track for more rate cuts, and it could be big reductions. But as you guys can see, this is the current numbers from the explanations that we have just shared with you guys. And one thing is for sure, we are still seeing the core PCE is stronger. The PCE data is weaker, as you guys compare from 0.5 down to 0.2, and personal income lower from 0.3 to 0.2. And price indexes are going lower on a monthly to monthly basis, 0.2 to 0.1. Inflations on a yearly basis were down 2.5% to 2.2, but for the core PCE, it's up to a total 0.1%. And on the other side, we have the University Michigan sentiment, where we are seeing that it was getting better on almost all sides: the sentiment, the conditions, and the expectations. where we are seeing that it rose towards a 5-month high on optimisms about the US economy in the wake of the Federal Reserve's rate cut. As you guys can see, on almost all sentiments, so final sentiments was up, current conditions a 3-month high at 63.3, as well as the expectations increased to the highest level since April. And expectations earlier in the month showed some concerns, but this was reflected in the parts of the Fed rate decisions to lower rates. As you guys can see, that we are seeing that the consumer index were going higher, meaning that people are quite optimistic on the economy of the US side, and the consumer 12-month economic outlook is even getting better as well. Showing that the US citizens are getting more optimistic about their economy. As you guys can see with the details following as well, people are expecting inflation rate will be just around 2.7% over the next year, down from 2.8% previously last month reported, and inflation rising to 3.1% over the next 5 to 10 years. And this increase in sentiment is followed by the Fed policymakers to reduce 50 basis points, and the further reductions are helping to underpin consumers' outlook on the economy as well as their personal finances. As we can see that some 55% of respondents see declining borrowing costs in the coming year, the largest record share on record, and that's leading to improving views of buying conditions for big ticket items. And consumers' outlook for their financial situations climbed to a 4-month high, and this was due to, for almost all parts, where we are seeing consumer sentiment rose among Democrats and a 5-month high.
So, what doing?
Well, it also edged. And it was also edged up amongst Republicans and political independents. So that means that the consumers' outlook was very positive even for the Democrats, Republicans, and the political independents, which means that the overall demographic of the US citizens are still very much positive on this 50 basis point cut out of the Fed rate. And on Friday, we are seeing that St. Louis Fed president said he also favors gradually lowering rates after a big cut last week, and even the Fed governor restated her view that the US economy is still strong. And on Thursday, we have seen that the Fed chair didn't offer details on the economic outlook for path for monetary policy during a pre-recorded speech. And Treasury rallied as data cemented bets of further interest rate cuts by the Federal Reserve, and we are seeing that yields are lower across the curve, with the 10-year rate hovering around 3.75% and the dollar spot index declined for a 4th week. And a key driver of markets later next week, which will be this week guys, will be jobs data, which will provide further clues on the state of the labor market. Alright. So we will be having one last discussions on the Canadian side. Afterwards, I'll be ending today's live stream, but we are seeing that the US dollar CHF could be continuing that weaknesses, and it was in line with our signal, so that's a good thing. We'll be just letting it to run on its own. And unfortunately for the gold market, we are started to see some weakening signs, so it's much better for us to hold on the trade. If it doesn't go below that stop losses, that means everything is still on track for a rebound around 2,650. The most, I'm not expecting it to go higher than that number. Okay, so I'll be discussing one last slide of the lessons, and I believe that it could be related to the US dollar Canadian dollar side. Okay, we are seeing that the Canadian economy has already shown more weaknesses, as with the preliminary data has shown that GDP was flat in August as declines in manufacturing, transportations offset gains in oil and gas extractions and the public sector, and that will be the 3rd month of zero growth in 6 months, even though it followed the 0.2% expansions, which beat median estimates of 0.1%. In July, these are the details that really helped the GDP to grow. Service industry grew by 0.2%, retail, finance, public sector leading the gains. Utilities and manufacturing drove increases in good producing industry, which expanded 0.1%. But we are seeing the construction sector contracted by 0.4%, the second monthly straight of those decline, and the largest detractor to growth, meaning that the construction side, meaning housing, building, and also all related constructions are slowing down the overall GDP or the economy of Canadian side. And the data has already shown that it will be just expanding at 1% annualized pace in the third quarter, below estimates of 1.5% and the central bank's forecast of 2.8%. As you guys can see, even the governor of the BOC has started to say he wants GDP growth above 2%, but right now we are missing that, and right now we are just seeing the 1.5% GDP growth on the Canadian side. Because we are seeing Canadian economy is slowing, and even Bank of Canada policymakers are increasingly focused on preserving those economic growth after inflation slowing down below 2%, and they have already started doing it by cutting 25 basis points, and for the third straight meetings, right now we are seeing that 4.25% rate, and they signal more cuts to come on the BOC side on the next October 23 meeting, and there are still key inflation and employment reports to come before the decisions. And earlier this month, the BOC governor predicted that officials may cut rates by 50 basis points in one decision if inflation and economic growth decelerate more than expected. But they could also decide to slow the pace of cuts if growth is stronger or inflation is persistent, where we are seeing the possibility of a 50 basis point cut, where we are seeing the economic side is weakening further and further, guys. Okay. So I believe I've shared with you guys mostly of these signals for tonight related to Japanese yen, euro, USD, Canadian dollar, gold, and silver, guys. Okay, so if you guys have been following our live stream from the early side to now, I believe that you guys have gotten the insights on each state of the economy and what is the impact on the currency side as well on the stock market side. Okay, so as usual, always pay attention towards this entry key setup, stop losses, position sizing, as well as your trading profit taker and stop losses if you guys don't look at minute to minute charts. And if you guys have any other questions, I believe that you guys could have been asking me, but I'm not seeing any discussions on that website that I believe I've recommended multiple times for you guys to look
doesn't mean by that? Okay, so as I already mentioned that usually end of the month, so now today is the last day of September. So what usually happen when last day would end September? As we already mentioned, this is what this is. Let's go through a candlestick, then you will be knowing what I'm saying. Okay, so this is fourth week, third week, second week, and first week. So this is the manipulations, and right now you can see that overall is the distribution and now is rebalancing back. So if you still don't know what I'm saying, then I will be drawing out the candlestick so that you will be knowing what I'm saying. Okay, so here is the so usually candlestick is what will be forming what. So it's forming something like this. Okay, we if the bullish candlestick, so something like this, and usually we'll be forming something like this. Okay, so this, so you can see that this is actually a candlesticks. Okay, so you know that this is the open, high, low, and close. Okay, so usually a candlestick will be having a wick. Okay, no matter you are going uptrend or downtrend, there always a wick behind of it. So you can see that this is the wick, bottom wick. So this is here, and this is right here reaching back, and right now is rebalancing out. So today is last day of September, so it's likely to continue on a bearish momentum and will be continue going lower until on the tomorrow will be the most important because tomorrow is the beginning of October. Okay, so today this downtrend, what I'm looking through is a rebalancing. So rebalancing is closing below and forming here, and the next month, okay, the next month maybe something like this will be closing below something like this. Okay, because this is the closing price, so maybe something like this. Okay, so closing below and we'll be forming another candlestick. Okay, bear with me with my not so good drawing on the candlestick, but just to be giving you understanding. So this is what is usually happening. So once the price has been closing down, so maybe the beginning of the week, because this is the NFP week, so there will be a lot of volatility. So we our expectations will be giving us some manipulations. Once the manipulations has performed, then after that, this is the bottom line, and price will be going back to the distribution. Right now, we are likely to see the price is going through uh, a rebalancing phase. Okay, so to be easy, I won't be drawing a whole candlestick, but if you know what I mean, I will be drawing something like this. Then you'll be also know what to say. Okay, this is the bar chart. So bar charts and candlestick is actually the same thing. Candlestick is much more visualizations that you can see the candlestick formations, the engulfings, the pin bar, and so on. But the bar charts you can see the volatility, but to be more easy to you to see and also to be more easy for me to draw, I will be drawing this. So right now we can see that the price is forming this, so you can see that this is bottom line. So you can see that this is a bottom line and this is the upper line. Okay, and this is also the upper line. Okay, so once the price has been going through, right now is going through a rebalancing, and not so sure is it here or here, but usually I'm seeing this kind of trend. You can see that this is a manipulation displacement. So I'm thinking that right now it's going through external to internal. It's a really advanced thing, but it's going through a rebalancing. Okay, so right now we are facing some kind of rebalancing. So right now, if you're asking me right now, uh, can we do long? I'm thinking that doing short is much more likely. I was actually planning to do shorts in this area. Okay, so you can see that the red area is actually my point of interest. And once the price has been forming some kind of manipulation displacement, I was thinking to do shorts, going back to here or reaching back to the 50%. But because I'm preparing on the live streaming. So you can see that price has been falling back from the I mean, forming back from this, what we can say, this fair value gap, and also reaching lower. And this is actually what we can try to do shots on, putting our stop loss behind of this 10 pips. We can actually get 1 to 3 easily, 1 to 3. Okay, so actually we need to know what is the flowing going on so that you will be forming your bias. So what is bias? Bias is what are you thinking today? What's your directions of the day? Are you thinking is it going higher, or do you think it's going lower? So if you are thinking the market is going higher, what do? You need to buy at a discount area. So it's actually a quite most important thing, and the most hard to determine is the bias. Okay, so what is how to determine your bias and what's your directions? After you forming your directions, then you need to forming confirmations going back to the higher time frame to in I mean higher time frame same I mean indirectly with the lower time frame and so on. So right now, our bias of the day, okay, is going shorts. So meaning that it's going lower. Okay, actually, to be honest, I was thinking to do long in the morning. Okay, so why? Because we can see that the price has been forming back to this fair value gap, and the price has been eventually going higher. But you can see that it's actually reaching through this fair value gap. I mean this order block, reaching through this order block from this 50%. So what we can see that this is the manipulations and going back to the displacement and disrespecting on this fair value gap. After that, the price has been going lower and lower. And after that, because I was also thinking that today is the last day of September, so it's likely going back to a rebalancing phase, reaching through a more lower line. Okay, so good evening, everyone. Thank you for joining, and I hopefully that you guys learned something new. Today I will be talking about my strategies, and also one of the most important thing is that what is my thought of the day. Okay, gold is now down after a wave of gain. How do we trade next? Can gold continue enter long or enter near 35? Not really. I'm thinking that the price is going lower. Doing short is much more effective, to be honest. It's like a cup. Okay. No, not so sure. What do you mean by that? Maybe you're thinking that it's maybe of a cup formations. Can go, I mean, drawing like this, what do I think will fall first? After all, there were more falls than gains today. I think you may mean is that would be more drop rather than gain. Okay, indeed, the decline is more, and the rise is just corrections and increasing. Okay, so right now let's talk about what we have been doing. I think that the most the most tre- the best trade that I trade yes last week is the crude oil. Okay, oil I already mentioned that what we have been going back to the external to the internal, and we are likely to see what we are likely to see that the price will be continue going on the lower sides. So we actually thinking that the price is eventually will be going on the lower sides. So how do we trade this week? Okay, this week, nonetheless, we are keep on doing shorts on the gold, I mean crude oil, and I will be predicting that the price is going through this area. So right now, I'm exactly thinking that the market is going internal sides. So you can see the price has been reaching through this, grabbing this liquidation. So we need to see where is the fair value gap that the price has been going hitting on. I'm thinking that maybe is 4 hour time frame, so we need to have our point of interest. So using this and this fair value gap reaching on the lower sides. So where is it? Will be on here. So this is our point of interest. Okay. So going back, this is our point of interest. So we'll be using a red line to covering up. So you next time after if you know I've seen so much on my live streaming, next time when you see I drawing on the red line, not meaning that I'm doing short and that area, is meaning that that point is my point of interest. Okay, so this is 4 hour time frame. So because this is a 4 hour time frame, so we'll be going back to the 50-minute time frame. Okay, so once the price has been going through the 50-minute time frame, we need to see the manipulations through the displacement. So what we can see right now, manipulation, displacement, okay, rebalancing, and now we also can see that the price has been going through on the lower sides. So we need to see this might be the highest point of the day. So I'm looking to do shorts, to be honest, just doing shorts. So going back from the 50 minutes, let's see where is the liquidation is going back. Will be probably here. So let's see, is it here? So right now is a rebalancing. So I'm thinking that this might be the highest point of the week. So because of that, we'll be doing shorts. Okay, so where do we do shorts on? So let's see, is there any fair value gap? Nope, nope, nope. So we'll be using a order block, seeing that the price is disrespecting here. So I probably will be reaching using this 50% above. So I probably will be using this as my point of interest. So this is my area. Okay, so this is my shopping area. Why? Because this is an order block and also a discount area. So I probably will be aiming here as my entry level. Okay, so this is my entry level and I will be waiting for the price to reaching through. Then after that, I'll be using 1 minute to see is there any manipulation displacement. Then I will be going back to the internal to the external and I will be doing shorts. So the bias of the week, I'm thinking that it's doing shorts and probably the price will be reaching here as my liquidations. Liquidations, the second will be here, the second will be here, this liquidations, and another day I will be aiming here. So if I'm doing shots here, my first and TP will be here, second will be here, and third will be here. So overall, I will be thinking to do shots, and hopefully I'll be gaining 1 to 2k and 3k profits. Okay, and also need to say that this is a real account, even though I've been drawing back, but I've been at, this is a real account, 10k account, and currently is up about 800. But we'll be aiming to see if we can flip it or not, and hopefully we'll be flipping in the next couple of weeks. Okay, so let's go back on the other pairings. So let's see this the I mean the gold market is actually on the lower sides because the price has been showing on the lower and we are probably doing shorts is much more beneficial. Okay, so going on the comment sections. So now what do we do? I didn't pay much attention on crude oil today. Crude oil is up a bit today. Crude oil move relatively slowly and very small movement. Okay, the focus of this week is the last few days. If you can make it a few frustration profits day, it's already a good harvest. I'm thinking that it's probably going back to the rebalancing. So you need to know one of the few things. Okay, this is also one of the really important informations that you need to know. Price, when the price, if your weekly bias is going higher, okay, going back to the gold the gold market. If your weekly bias is higher, you will be eventually waiting for the price to go lower because it's the same thing. Okay, so if you are thinking the your bias is on the higher sides, you will be eventually will be waiting for the price to go lower first. Okay, go lower first and grabbing some kind of liquidity area. Once the price is grabbing this liquidity area, the price will be eventually forming back and then retracement and then going on the higher sides. Okay, so for example, where is it? Here is a really good example. Okay, 4 hour time frame, control I will be control Control Y. Control Y will be giving you a really good weekly bias. So from here, our bias of this week is actually on the bullish. So beginning of the week usually will be going a lower, grabbing some kind of liquidity. Once the price has been grabbing liquidity, then the price won't be going back to the lower sides and eventually will be going higher and higher and reaching through a new high. the same as well. You can see the price going lower first and then going higher and reaching through, and it's most likely won't be reaching here. Same as here, lower and higher, okay, and then continue on the higher sides. Ranging area, then we can't say much, but if the price is going on the shorter sides, what we can expect it, the price will be going higher first, and then after that will be going on the lower sides. So you need to know that what is your bias of the week. So if your bias is going on the long sides, meaning by if you are thinking to do long, okay, thinking to do long, this is actually a really good thing. The price is going lower first, grabbing this certain liquidity area, letting you guys know that maybe this is going a downtrend, but eventually it's going at uptrend. After that, the price will be going on the higher sides. Okay, so you need to know that. So you need to know that what is your bias. Okay, you need to know that what is your bias, what is your direction of the week. Nonetheless, this week we are expectations that the gold market will be likely to go higher. No matter you are using which time frame, the larger time frame, the shorter, maybe you use shorter time frame, a lower time frame, then it's likely to go on the shorter sides. But if you are using a bigger time frame, no matter you are using indicator, price actions, ICT, SMC, Elon wave, anything else, it's likely to continue going higher. You need to know that we can't predict the market. Okay, we don't. I'm recommend that every not newbie, newcomers or beginners usually will be predicting the markets. For example, for myself, I also like to predict in the previous few years. Previous from my beginning age or beginning on the trading sites, I will be always predicting the market. Once you predict the market, you will be having expectations. Once the expectations didn't meet your expectations, you will be having emotional that will be influence your trading. So I'm thinking that you need to know that you just keep on observe the market and let the market tell you what is going on right now and what is the bias right now so that you won't be having are really expectations that, oh, is it going higher, going lower, or something like that. Because in the trading industries, we can't 100% sure that is it going higher or going lower. No matter you are quants, coming from quants or coming from the fundamentals indicator or something else, it's impossible to predict the market 100% corrections. Okay, you'll be facing some kind of area one once per time or any time you will be meeting on. After that, you are meeting that you will be facing a lot of problems and will be having some expectations. Okay, so in trading, we need to have uh, keep your expectations on the middle sides and don't let the expected that the market will be happen anything and don't let the market carry you on. Okay, don't try to predict the market. Okay, every beginners will be forming that. Okay, for example, I'm thinking that the market is going higher. Okay, once the market is going lower, I will be changing my strategies, I will be changing my directions, and then I'll be FOMO or something like that. So you just need to let the market tell you what is going on right now. Okay, is it going a retrenchment or something like that? And meet create your expectations on a middle sites so that you won't be having formal or emotions controlling your tradings. Okay, so let's see. But this year market is relatively average. The situations in the middle years is okay, deteriorating day by day. But why is the oil market performing mediocrely? Can't figure it out either. The situations in the Middle East is not longer a matter a day of two. It has been developing for a longer time, so this news did not immediately cause the surge in the market. Okay, I think so. Today, the fluctuations are limited. After all, today is the last day of September. That's right. Today is the last day of September. So it's likely we have a really large volatility. Mostly will be a ranging area. The market fluctuations are destined to be relatively small on Monday. Okay. Now, okay, so going back, we have already talked about some of our bias and already mentioned that we are likely to go on the shorts, and where do we expect it on will be on here. So we actually miss our trade from here, but it's okay because we actually expecting that the price will be reaching through this liquidations. Okay, so going back. Right now, we'll be talking about some of the fundamentals. Okay, I'm think that actually the Steven has been telling you guys the fundamental, but I will be telling you my point of view. I won't be just fully fundamental. I will be talking about how do it really affected on the market. How do he how do this data affecting the markets, and how do we project about this? You need to know that one of the most important thing, okay, data, a lot of people will be looking through data differently. Okay, from the short term perspective, data will be search of volatility. So you have once data has been announcing, you will be having a lot of trading opportunities. Okay, from the longer trading, if you are a long-term trader or maybe a swing trader per se, then you'll be looking through another directions, another perspective. So it's determined on which trader are you. Are you a short-term trader, swing trader, position trader, or maybe a scalper or so on? Okay, scalper, it didn't really matter to them because scalper is actually try to scalp maybe 5 pips or 10 pips a day. But if you're a short-term trader, then news is actually a big factor to you because you need to know what is going on. If you're a swing trader or maybe a long-term trader, then this is also already a big factor because you need to know from the fundamental perspective what is going on, what will be the Federal Reserve will be doing, and so on and so on. Okay, so let's talk about last Friday. Okay, last week we actually having some not a really big movement. The dollar index is going a ranging area, not really not really a big movement. Okay, one of the biggest reason is that the US spending issues, it's not really that bad. Okay, even though that the inflation has been dropping down, the unemployment rate has been increasing gradually, the employment change demand has been also dropping as well, but we can see that the spending is still on the above side. Okay, you can one of the biggest reason is that the people is keep on using credit cards. So you can see that the Mastercards stock markets or maybe the Visa is likely to go on higher and higher because the demand of the credit card is increasing. Even though that they are the they don't have any money, but they're using credit card to spending. So you can see that the spending it's continue forming support. So last week the overall data showing is this kind of informations. Okay, so last Friday the most important thing is the PCE price index. PCE price index is actually reflecting on the inflation sides, and the Federal Reserve is will be really watching on this news. Okay, because PCE price index is really reflecting on. So the PCE is really reflecting on the inflations. Okay, so it's really important. So the market will be really looking through this data. So from this data, we can see that the data has been rising back to 0.1%, and it's below than the Wall Street expectation 0.2%. Okay, so on a yearly basis, the overall PCE increasing 2.2%, its lowest annually and increasing since February 2021. So right now we can expect it that the PCE price index is gradually going on the slower sides and be going on the lower, and it's towards on the 2% Federal Reserve targets. So from this we can see that uh, overall the PCE price index from the yearly 6 month or maybe even the 3 months has been gradually reaching towards on the 2% targets. So once the data has been announced, dollar index has been continue going through a really bearish momentum in a short period of time. So you can see that the dollar index has been going through a really strong bearish momentum in a short period of time. Okay, so So, because of this data, we can expect that the inflation sides will be gradually on the lower sides, and this will be creating increasing the factor that the Federal Reserve will be cutting rates on a 50 basis point. So right now, the market is really focusing on how and how is the Federal Reserve will be cutting rates on November. Is it 25 basis point or 50 basis point and so on? So the market is guessing, is it 25 or 50 basis point? So if you have been listening to my live streaming, you already know that inflation is not a really big issue right now. The biggest issue is the employment sides. Why? Because the unemployment rate has been rising quite much from March till now. Okay, from March, actually, the expectations will be around 3.9 or maybe 4%. Right now, it's already 4.1, and exactly that. And the Federal Reserve has been adjusting their expectations on the unemployment rate will be reaching through 4.4%. So because of that, we can expect that the employment data is much more important than the inflations. And from the Federal Reserve, we can see that Federal Reserve has been saying they will be not really focusing on inflations, to be honest, and they are really high confidence that inflations will be dropping 2% maybe in 2026. Okay, but right now a lot of people will be speculating that will be dropping in 2025 or maybe even in 2024. So I'm thinking that right now the most important is the unemployment sides. So the unemployment rate has been increasing, and also the employment change has been dropping from the last month. So this week is the most important week because this week is the NFP week, the non-farm employment change. A lot of speculation saying that the unemployment rates will be gradually going higher. Okay, so its expectations will be going higher. The employment change will be going lower. So if that really happens, then we can suspect and also expect that the dollar index going lower. Okay, this is on the short term perspective. So if you are trading on the short term, then if you're expecting that the NFP data is lower than expectations, and the most important thing is the unemployment rate is higher than the expectations, then what we can speculate that the dollar index will be gradually going on the lower sides, and this will be forming which of the financial pairings we need to know that the currency strength index will be mostly probably will be forming some kind of support from the AUD pairings, the New Zealand pairings, and also the CAD pairings as well. Oh, so CAD pairings has been dropping quite much. One of the biggest issue is that Canada has been dropping their interest rates, and their economic situation is not that good. Inflation rate has been dropping down to 2% below, and the unemployment rate has been increasing quite much. So because of that, Canada has been dropping their interest rates, and also one of the biggest factor is that crude oil also dropping. And as you know, crude oil and CAD pairings is a really strong correlationships. So once the CAD pairings has been dropping, indirectly will be putting some kind of pressure on crude oil as well. So you need to be aware of that. Okay, so this is what is really going on last week. Okay, PC price index is lower than expectations, and people it's speculations that will be dropping their interest rates, maybe 50 basis point in last Friday. But today, in today market, we can see that the CME watch through is Federal Reserve expectations on the rate cuts. So right now it's 25 basis point. Because of that, we can see that the dollar index has been forming some kind of support. So going back from the markets, okay, so let's see on the market perspective and see what is going on. Okay. Okay, so right now let's talk about, oh, this is actually a really good thing, really good way to trade. Thinking that the market is actually forming some kind of manipulations from here. Once the manipulations has been formed, we need to see is that a displacement. I'm thinking that the market is eventually will be going on the lower sides. So you can see that the market has been forming this kind of fair value gap. And where is it? You can see that price has been trying to touching back, and the price has been reaching on the lower side. So this is the area we can see, and this is the manipulations displacement in the lower time frame. Actually, we can just do shots, maybe from here. Okay, we can just do shots and putting our stop loss above and expectations that the price is going on the lower sides. So right now, I won't be doing shots right now because the price has been reaching on this order block. So usually we'll be forming some kind of support. I will be using this as my reference and using that point of interest to do short positions. Okay, so where do we do shots? Okay, let's see. Is there any fair value gap above? I'm thinking that the price is eventually will be going on the lower sides and reaching on the low here. So doing shorts is much more effective, to be honest. Okay, so doing shorts will be much more effective, and the price will be eventually reaching here. Maybe if we want to do shorts, we can try to do it here. Okay, maybe do it here and low risk trade. Try to do shorts from here and putting our stop loss above here. Okay, so maybe if we want to do trades, we might try to do shots from here, putting our stop loss 20 pips, and we'll be getting 2 to 1 or 3 to 1. Maybe around here, we can get it from here, and maybe 2 to 1 should be around 20 pips, and we'll be gaining 40 pips or 50 pips, or even here. So it's actually a quite good, not really trying to do short right now because this is something like an order block. So in the shorter time frame, I'm thinking that this might be forming some kind of internal to external. So you can see this is the external range to the this will be internal to external. So reaching through 1 minute, because this is MT4, MT5, we can't make it in a much more shorter time frame. Okay, in TradingView, you actually can use it as something maybe much more lower, 30 or 50 seconds, but let's use 1 minute should be fine. So we'll be doing shots from here, and let's see how it turns out. Okay, here putting our stop loss above because the price has been reaching through here. So we'll be doing shots from here, and expectations that price is will be on the lower sides and reaching through here. Okay, maybe even here if you wanted to, but we are aiming here because the price has been aiming on the 1 minute time frame, reaching through on the discount area, and we are likely to see on the lower sides. Even though that this is on the 5 minute has been forming some kind of external range, I mean the fair value gap, but we are likely to see on the lower sides, okay, because we need to match with the higher time frame what is going on. Higher time frame is showing signs of going lower, so we are doing shorts is much more beneficial. So we are doing here, hopefully the price going through. If not, the price is eventually will be going on the lower sides. So you can see the price is going on the lower sides, okay. A lot of people might be doing long, to be honest, because thinking that the price is eventually going on the higher sides, but you can see that the price will be going lower and reaching through this equal low. Okay, so if I'm doing short positions from here, I will be putting my stop loss above and aiming below, reaching on the lower sides from that area. Okay, so you can see that the price has been disrespecting on this order block. So this is actually a good thing, to be honest. Okay, because if the order block has been respected on, you can see that the price will be eventually going higher. Okay, this is really important. You need to see that if you are on a longer sides, if your expectations that the market is going higher, you need to see the market respecting on the order block, maybe respecting on the fair value gap. So this is actually a good one. We'll be doing shorts above and going on the low sides. Okay, price has been forming this order block of this 5 minutes. Be aiming, this is our entry. See, yep, this is actually a good one. But this is an order block. Is there any internal liquidations from here? Let's see. Maybe here is the internal range. Is it? Down move before up move? Not really. So we are continue to on the lower sides. Okay. This might be the manipulation phase. This might be the manipulation phase. And looking for the price to go lower, even though that this might be a really strong in the 50-minute time frame, this might be a really strong, I mean 5 minute, okay, this might be made order block, but looking through a bigger time frame, we are likely to go on the lower sides, and the price has been eventually just disrespecting on the fair value gap, so just keep on going lower, okay, on shorter sides, and the price will be eventually reaching here. Okay, we can actually just do shorts, to be honest, and putting our stop loss 30 pips and getting, but the risk reward ratio is not that good, it's about 1 to 1.5, so I rather much more focusing on the risk reward ratio. If the price do really reach above, I will be likely to do shorts. If not, I won't be doing shorts, because if I'm doing shorts, calculate with the spread. Okay, if I'm doing short right now, stop loss above 30 pips and I'm getting maybe 1 to 1.5, so that's not a really good opportunity, to be honest. So let's see. Okay, looking at the silver, the current downtrend, it seems to be quite good. So let's see on the silver market. Silver market is actually on a, okay, silver market is also, it's also on a downtrend. So let's see. Looking on the bigger time frame, let's see what is going on. Okay, the bigger time frame, we can see that the price has been grabbing these liquidations, okay, and going back to the 4 hour time frame, this is the manipulation displacement, okay, so you can see that manipulation displacement, once the price has been reacting from here, this displacement here, we can see that this is actually on the lower sides and predicting that the price is going through on the rock from here. So doing shorts on silver is actually a good thing, right? What we can see right now. Okay, so let's see on the gold market. Okay, the gold market has been reaching through our area. Okay, so we'll be doing shorts. Oh, the price has been reaching through quite high. So using 5 minutes price eventually. Okay, wait a moment. Let's see how does the price react. 5 minutes. Yeah, I'm thinking we can try to do shorts, to be honest, but not really liking using 1 minute. So be using a 5 minute to see. Okay, 50%. So if I'm doing shorts right here, I'll be putting my stop loss above and trying to make it on the lower side. Price has been eventually reaching through here, going lower, but didn't really reach through displacement on the lower sides. Yeah, I'm thinking that we can try to do shorts. Yeah, we can try to do shorts. Okay, let's see how the fate will be bringing us to. Okay, going down this area. Maybe if you want to be much more safer, you can try to make it. And let's see how it goes. Okay, why we be doing shorts? Okay, because overall the market is telling me that the price is going lower and the price has been reaching through this. Later on, I'll be doing a top-down analysis, but I'm thinking that the price is going through this manipulation I mean this external range, manipulation displacement, and then internal to the external side. And the price has been also reaching through this 50 minutes on the fair value gap area, even though they haven't reached it yet, to be honest. But we can see that the price is going through a really strong displacement, disrespecting on this all things. And I'm thinking that this is might be the highest point. Okay, this is the highest point, and the price do really reacting on this fair value gap area, this order block area. So this is the you can see from the 1 8 minute time frame, you can see that the price has been falling back to this order block. So because of that, I'm thinking that the price is eventually on the lower sides and reaching on the low. Okay, so So right now, let's do a top-down analysis on the gold market. Okay, why do I do shorts from here and using 1 minute time frame? We need to know the order flow of the market. So what is the market? What is the liquidity? Where is the market going? Okay, this is really important. Is it the market going lower or going higher? Okay, so looking through, we'll be cutting out all the line from here, so it's much more easy to explain. Okay, if you still remember what I've been saying, this is really important. This is the daily liquidity area from here. Okay, so you can see that the price has been reaching through this daily liquidity area. And once the price has been reaching through this daily, you can see that uh, the price is fail to displace above, meaning that the price is fail to displace above. Using 1 hour time frame, what we can see, the price has been closing below. So we can expectations that this is the manipulations and displacement above from here, okay, from this area. And then once the price has been reaching through, we'll be using 5 minutes. You can see that the price has been reaching through this order block. Okay, oh shit, where is it? Okay, here you can see that the price has been reaching through this order block, and then eventually it's going on the lower sides. Okay, So once the price has been going lower, this is a really good thing. Even though that last week we have been doing shorts and been swiping off. So this is really making me quite angry last week, because I already mentioned that this is the highest of the week, highest of the day on the Friday, and expectations that the price is going on, this is going lower, manipulation, displacement, but didn't expect that the price just grabbing this, and then our price is going on the lower sides. But from this perspective, we can expect it what? We can expecting that the price is going on the lower sides. So you can see that the price is showing on the lower sides. There's a chances that we have will be hitting our stop loss. But from the bigger time frame, we can see that it's likely to go lower because the market is forming. Here is the manipulation, displacement, forming back is another manipulations, and also reaching through this displacement, so it's likely to go on the lower sides. But if the price do really reach back and this disrespecting on this one and also this one, then we can exactly expecting that what will happen, the price is going higher. So let's see how it happens. But I'm thinking that this trade is okay because we already mentioned that it's likely to go lower because the market do really reflecting on this one manipulations displacement. But let's continue our top-down analysis. Okay, so because of that, we can see that the market is going lower. This is a really good one, manipulation displacement, and then this is the internal sides. So you can see that this market has been forming internal and ranging lower and going on the lower sides. So this is actually a really good external range. So you can see that the price has been going through this external range, okay, 4 hour, and going back to the external. So once the price has been going external, where do we expecting on? Will be going internal to the external. So it's likely to go back to the internal sides and going on the lower sides. So where do we look through? The most important thing is that where is the liquidity going on? So this is the 4 hour liquidity area. You can see that it's a strong displacement. So we are likely to see a rebalancing on, let's see, is it 1 hour? Okay, you can say it's 1 hour range, or maybe 4 hour range. Is it 4 hour or 1 hour? Let's see. Let's see. 4 hour. I think that is actually 1 hour range. It seems like the market is disrespecting it and forming this fair value gap. Seems like the market wants to go higher first and then go lower. So we might be failing on, to be honest. So it's okay because overall, I'm thinking that the market is going lower. If the price do really hit our stop loss, then we might be trying to do another trade after that. But from what we can see right now is a really good one, manipulation, displacement, rebalancing out and going lower, but seems like failed to displace from here. So this is not a really good one, but seems like the market do really respecting from here, going on the lower sides. So let's continue and see if the price do really SL, then we'll be trying to do another trade afterwards. Okay, so let's see where is the liquidity area is going on. Is it the 4 hour or maybe the 1 hour time frame? This is the 4 hour ranging and grabbing on the 4 hour time frame. So I'm thinking that this might be the 4 hour time frame. So using 4 hour time frame, the price has been grabbing this liquidations. We'll be using uh, if the price do really breaking through this the next liquidity area we are expecting at it will be here. We'll be reaching through this 50% area, but if not, we'll be using a 50-minute range to try to do trades. Okay, trades. So 50-minute range will be here, so you can see that the price is reaching through this area. Okay, you can see that the price do really didn't really reach through, to be honest, but it shows a really strong displacement. So you can see that the market do really forming some kind of fair value gap from here. Okay, so you can see this is a really good entry. To be honest, I'm thinking that this is actually a good entry. If you are much more conservative, you can try to do shots from here and put your stop loss above from here. 40 pips and get 2 to 1 should be fine. Okay, because this is actually a fair value gap and you can wait for the price to give us a displacement. This trade is actually much more aggressive, but if you wanted to, you can try to do shots from here, put your stop loss above, and make it a 1 to 2 should be fine. So it's likely to go on the lower sides. So you need to know what is the order flow, what is the flow is going on, and then afterwards you will be likely to trade afterwards. But no matter what, I'm thinking that right now it's going shots. It's just matter of your entry. Is it your entry? Okay, if your entry is really good, then it's fine. Okay, so let's see how it happens, and we'll be going on. Okay, let's see some of the questions, and let's see some of the questions. Okay, most important thing of the market is you need to know what is going on and so on. Okay, so the next thing I will be talking about the currency trend index. Okay, this is really important and this is a really good thing to know about it. I mean, oh, sorry. The next thing we'll be talking about economy news. Okay, so what is really important on? Okay, if you are trading a short-term trade, news is really a big factor because news will be affecting your trades. Because if you are trading short term, your stop loss eventually will be much more shorter comparing on the swing trade. So won't be a much big factor to the swing trade because your stop loss will be eventually will be much more higher comparing from the short term trading. Okay, so I'll be using a short term trader perspective and letting you guys know which of the data is really important. Okay, one of the biggest data, and I'm thinking that today will be giving us much more volatility, will be going back to a rebalance, especially on the gold market. But the most important thing or the data will be at the Tuesday. Tuesday will be eventually giving a manipulations. I'm not so sure is it going high or going low. I need to see how the market react first on Monday. After that, I'll be looking through what is going on. Okay, but I can say that the most important day will be Tuesday. Tuesday will be US JOLTS job openings. This data is eventually people will be using this data to predict on the NLP data. If the NLP data eh, are predicting on the NLP data, so this data is will be giving us a huge volatility. If you're a short-term trader, this data is really important. As I already mentioned that the Federal Reserve is much more focusing on the employment side. So the JOLTS, the non-farm payrolls, ATM non-farm payrolls, and also the US non-farm payroll is really important. Especially on Tuesday is the largest volatility. I'm thinking that, and Thursday and Friday will be giving us some kind of a directions. So I will be thinking that Tuesday is very important, giving us a manipulation phase. So maybe Tuesday will be forming the lowest of the week. So if you know when is the lowest of the week, then you know how to trade on. So this is really important. Okay. So let's go on. So let's go on the next one. Okay. The next. Okay. So what's my predictions? Everyone will be asking this. So if you're asking me, the predictions of what I'm thinking is that the job will be continue declining, especially on unemployment rates, maybe raising to 4.1% to 4.2, and the employment change will be also likely to affect it as well. So from the past data, we can see that The manufacturer has been affected as well. The service industry has been affected, even though the demand has been lightly strong. But you can see that the demand is gradually dropping. Okay, comparing from the few months ago for the data. So we can see that is that especially the next few weeks. I mean, the next. I make expectations that the data will be lower than expectations. Okay, so if the job openings or the job employment size is lower than expectations, then the US dollar index might be creating a pressure in the longer time frame. Okay, next is the currency strength index. Currency strength index is really important because if you know which currency is going strong and which currency is going weak, then you can try to do cross pairings. So for example, I'm thinking that AUD pairings and New Zealand pairings is going strong. Then what I I'll be doing, I'll be trying to find which of the currency is the weakest so that my ROI, return of investments, or maybe return of investment will be the highest. So for example, right now, the AUD pairings and the New Zealand pairings is the strongest. So which one is the weakest? So the dollar index and also the CAD pairings. So when I have this kind of informations, what I will be doing, I'll be trying to do shorts on AUD, CAD. Okay, this is really straightforward. I'll be doing shorts on New Zealand CAD. So I will be having a bias, not going through SMC, ICT, indicators, or anything. I'm just looking through this currency index showing me which one is the strongest and which one is the weakest. So if I'm gather this information, then I will be having a bias of the week. Then I will be trying to do long on the AUD pairing and New Zealand pairing, just comparing on the weakest pairs, such as the USD pairings, CAD pairings, and other pairings. This is a really important factors. Okay, so because of that, we are likely to do shorts. Okay, I mean likely to do longs on the AUD pairings, New Zealand pairings. Okay, so because of that, you will be knowing which pairings is going strong. Okay, you need to know each of the currency have their how do you say have their purpose. Okay, you can say that have their purpose. So what is the cost of AUD pairings and New Zealand pairings or CAD pairings going higher? Okay, what is the cost of putting pressure on the the USD, the Euro, or maybe CHF pairings? You need to know that there's two kinds of currencies: commodity currencies and also the safe haven currencies. The commodity currency will be AUD pairings, New Zealand pairings, and also the CAD pairings. Those three pairings is the commodity currency. Commodity currency is that the country economy is major boosting by the commodities such as AUD. I'm not so sure Australia and New Zealand. If I'm not mistaken, is uh, metals, um, metals, and has a really strong collaborations with China. So when the China economy is going good, usually AV parents it's also going good. So recently, if you are also be aware of the China, you can see that China has been dropping interest rates. So you can see that all of the stocks has been skyrockets from the A50, uh, and also SSE. Other currency has been going strong, and currently, from the sector perspective, the properties, the financials, the consumer spendings has been going stronger. So this will be giving some kind of supports from the AUD pairings and also the New Zealand pairings. And this will be gradually putting what on the pressure? Will be putting on the safe haven currencies such as the USD, CHF, and JPY. Okay, JPY even though has been going strong, but I'm expecting that JPY pairings will be going on the weaker sides in the longer time frame. Okay, so in the longer time frame, JPY might be going on the weaker sides. Okay, because why? I'm thinking that the current market situations is much more has been dropping on the dropping on economy will be falling into recessions, to be honest. So right now we can see that even though the data has been showing not that good, but not really that bad, to be honest. So you can see that the stock indexes is going higher, or maybe on uh, the cryptocurrency as well. So let's talk about the cryptocurrencies, everyone. Okay, so we have been doing shots. Hopefully we can aiming from here. Let's see after that and just set and forget and see how it happens later on. So let's talk about the cryptocurrency. Cryptocurrency, we are actually quite bullish on it. So uh, I remember I have been doing a research on Bitcoin, especially on Bitcoin perspective, because Bitcoin is indirectly will be boosting higher on other cryptocurrencies because you if Bitcoin is like stock indexes. When Bitcoin is going higher, the other cryptocurrencies will be going higher as well. So you can say that this is like an index, okay? And Dogecoin, or maybe Dogecoin, or maybe other much more low value on the cryptocurrencies will be more like penny stocks. Okay, so once the index is going higher, this will be indirectly affecting on that. So I usually like to just try to analyze on the cryptocurrency, Bitcoin. Okay, so right now, if you know that this year is actually Bitcoin hovering, okay, a lot of people is that saying they're hovering, and Bitcoin will be skyrocket and reaching through a new high. I'm thinking that as well, to be honest. So right now, what we can see, this is the manipulations and reaching through this displacement. So right now, what we can expect it on, the price is actually going a rebalancing. So what is rebalancing? Rebalancing is that if we want the market is going higher, okay, we need to have liquidity. So you can see that the price has been reaching through this liquidity. So it's not really possible that the price is going higher. So price will be rebalancing out and grabbing the lower liquidity. And once the lower liquidity has been grabbed, okay, a lot of people might be doing long and grabbing out. And then after that, the price will be going higher. So right now, what we can see is that the price has been reaching through this order block. So I mean fair value gap. Maybe here you can see that. Okay, so you can see this is a really strong manipulations and displacement. So once the displacement has been formed, we'll be using this as our reference. So you can see that the price has been formed and then going back, reaching through this order block, and the price has been eventually reaching through this. So right now, I'm thinking that the price is going on the lower sides. Last week, we actually tried to do this. Actually, we are trying to do long in this cryptocurrency last week. I'm thinking that the price will be going here, but eventually the price has been reaching through on the top sides. Okay, you can see that the price has been reaching through all the top sides and grabbing this liquidations. So once the liquidations has been grabbed, where is it going on? We'll be thinking that the market is going dropping here because a lot of people will be thinking to do long. So I'm thinking to do shorts, to be honest. So going back from the 1 hour time frame, we can see that this is the manipulations and also the displacement. So from what I'm thinking is that I will be doing shorts from here, to be honest. Maybe here doing shorts and expecting that the price is reaching on the lower sides and grabbing on here. So overall, my expectations on the Bitcoin is in the shorter time frame. Okay, shorter time frame. I'm thinking that the market is going lower, but in the bigger time frame, we are definitely on the longer sides. So if you are want to have a bias, I'm thinking that doing shorts from the Bitcoin is much more effective. So let's see. So overall, it's quite good, to be honest, and the entry is not that good. We can actually make it much more better, but this is the fair value gap area. If you wanted to, I'm thinking that you can try to do shorts from here, putting your stop loss above and getting 2 to 1 should be right. Okay, but I'm conservative from this trade, so let's make it I'm not so sure what's our stop loss. I mean, from here to here, so it's about 30 pips to be honest, not a really good RR. Usually, I'm getting one to two, or maybe 1 to 2 or 1 to 3. To be honest, so this is not a really good R&R, but it's much more effective that the price is going lower. Okay, so let's see if the price going lower. If the price do going lower, hopefully that price is reaching through on TP area. So see, a lot of people might be doing long to be honest, but eventually the price is going lower. So you need to know what is your higher time frame, what is your higher time frame bias, and need to pair with the uh, higher time frame, pair with the lower time frame. Okay, so okay, I'm using 1 minute to be honest. As I already mentioned, I don't really like using 1 minute because 1 minute is a lot of noise. I like to use 5 or 50 minutes, but sometimes if I want to do live stream on my live streaming, I don't have any choice, so I will be using 1 minute to do trade. But if my high probability trades usually will be 5 or 50 minutes trades, and I'll be getting 100 pips or maybe 50 or 60, 70 pips. But sometimes because doing live streaming and I saw a really good setup and the RR is quite okay, then I'm just straight away do trades. Okay. So right now we are looking that it's probably reaching on the lower sides. So let's just forget about it. Okay. So reaching that, let's do stock indexes. Okay, let's do stock indexes. SP 500. SP 500 is actually a quite interesting one. Okay, so let's do trades together. Let's do analysis together with these trades. So stock indexes, SP 500. SP 500 is really a good trading opportunity using SMC because SMC is a lot of great SMC traders. ICT is trading using SP 500, Nasdaq, maybe Dow Jones, those kind of trading indexes. But they don't really recommend using trading on gold or maybe especially on gold to be honest because gold is really high volatility and is really easily to swipe off to be honest. So sometimes I rather the trades, I mean Forex rather than gold market, but it's okay. But I'm thinking that sometimes if do really give us a really good R&R, then we just trade about it. Okay, so right here, what we can see, the price has been reaching through this liquidations area, and because what we already mentioned, you can see that the price has been grabbing these liquidations going higher. Okay, so to be short, I'm thinking that it's quite obvious the market is going higher. Okay, because the price is reaching on the lower sides on September, you can see that the September the price has been going lower, grabbing these liquidations and continue going higher. So in October, it's likely to see, and it's not really often to see that the price will be going on the lower sides, to be honest. So I'm thinking that October is much more likely will be straight up going higher. Okay, straight up going higher. So we need to know what is the opening price on closing price on September. So maybe we might use daily time frame. So this might be our stop closing price. So if I'm doing long, I probably will be waiting for the price to retracement first. But I think that this retracement won't be that much because you can see that from the monthly perspective, this has been dropping liquidity. So it's likely to drop slightly, to be honest. Maybe daily time frame fair value gap. I'm thinking that might be here, dropping back to this here, or maybe this range. Once the price has been dropping this range, I'm thinking to do long. Maybe I think there's might be a chance that the price won't be reaching through this area and then straightly go higher. But um, to safe to say that I'm likely to wait for the price to give us some retracement first, because you can see that this is a strong bullish candlestick. I won't be doing shorts. I will be waiting for the price to give us okay, so we have been TP. Okay, everyone, we have been TP. So if you listen to me, you try to do shorts from here and putting your stop loss above 40 pips, getting 2 to 1 should be fine. So you can see 2 to 1 should be fine, and we'll be going lower sides. So right now, I'm thinking that the market is likely to go lower, but let's see how it turns out. Okay, let's continue with the stock indexes. Okay, stock indexes, because the price has been grabbing these liquidations, it's not really likely that the prices will be going on the lower sides. So I'll be using 4-hour time frame and see. So you can see that the price do really reacting from this fair value gap. So this is a really good thing. So I'm thinking that the market is going through a rebalancing from this area. So I'll be probably doing long below this 50% because this is the discount area. So yeah, let's see, 50-minute time frame, low. I'm thinking that I'll be trying. Yeah, it's about the same, to be honest. Just I'll be doing long in this area, waiting for the price to rebalancing out and reaching through this area. I won't be doing shorts, to be honest, even though that I'm thinking the market might be going on the lower sides, but I will be waiting for the price to reach through here first and then give us some kind of sign, and then I will be doing long positions, because as I already mentioned, the bullish momentum is really strong. Doing bearish, I mean doing shorts, it's a really need a lot of experience and need a lot of time to monitor. Okay, but if you're interested on our trading signals, okay, if you are interested in my trading signals also, or maybe my analysis, you can just contact with our little secretary, or maybe you can just press on the free signals telegram channels. Just press on, you'll be giving out a lot of free signals. Okay, free signals. Not so sure how many signals per day, maybe one or two. So if you do really interested, please do follow us on our signal group. Okay, so let's see the comment section below. Okay, silver doesn't give us chance to enter the market. I want to go shorts if keep falling, but now I'm afraid that there is no enough space below price. It's still a bit dangerous for the current price. Directly chase is only Monday, don't be too anxious. The focus this week is non-farm payroll data. We just need to maintain a good income every day. Okay, okay. Also it's okay if the market frustration later today. It's worth being happy if you can achieve a few ways of transactions. The trading opportunities this week is definitely not good. We can expecting that. How do you say that trading opportunity this week is not good? I'm thinking the opposite. This week the trading opportunity will be a lot. Okay, especially on Euro USD, GB USD, and other pairings as well. Okay, so let's see. Let's talk about the Euro USD. Euro USD, I really like to trade Euro USD. Why? Because Euro USD usually give me a really obvious trend. Okay, so once we have a trend, we can just straight away set and forget. Not like gold market. Gold market sometimes will be forming some kind of this kind of things to me. Okay, last week I already expectation this is the highest of the week. I mean highest of the day, and I've been doing shorts. I remember something like here. I remember it's a sniper entry. I mean, I think it's around here, something like that, and expectations that market going lower, but didn't expect because of the data, the price has been grabbing these liquidations and then going lower. Oh, then shit, I didn't expect that. Okay, and because of the PCE price index, giving some kind of support from this, so you need to expectations. The one of the biggest thing that if you are trading on the New Year sections, you also need to consider the data. Because if the data is higher than expectations, this might be a manipulation. So I've been manipulated by the markets from this, and afterwards has been going lower. Even though my direction is right, but the price has been going lower and on the lower sides. Okay, so if you have any questions, please do comment as leave a comment section below so that I can read through. You want me to analyze which of the pairings and what trading method I'm using. Okay. To be honest, previously I was using Elliott wave, so you can see that Elliott wave. I'm really expert on Elliott wave, so I'm not so sure which of the pairings. So you can see that I'm really quite good on Elliott wave. But after that, I've been transferring to SMC because SMC will be giving us a much more precise on when to entry. But for either wave, it will be giving us a directions and when the direction of the market, but didn't really give us a really specific when to entry and when to do long or maybe do shorts or something like that. So there's a pros and cons to be honest. So pros on either wave you can expect and you can estimate when is the highest the market. Sometimes it really punctual, but sometimes it's not that good. So I've been changing to SMC. Okay, fully SMC. I've been using quite some time to get used to it, to be honest. So yeah, goal is testing again. So goal is reaching to where? External to internal. If you really wanted to, you can try to do shots from here. So where is it? You can see this is a really good time to do trades, maybe around here. Yeah, maybe. But I won't be doing trades right now. Okay, because I already say not really liking to do shorts. I do trades on the lower time frame. So you can see this is the external. This is a really good one. You can see that this is external to the internal. So using 1 minute charts, you can see that the market is going through here. So what we need to see a manipulations displacement on the lower sides, and then after that, the price will be eventually going lower. So right now it's not a really good time to trade. So this is the 5 minute order block. We need to see manipulations on the lower sides, or maybe a break of structure on the lower sides from here. Then we can try to do shots. So here is really important. I'm thinking that if the price do really dropping below, then I'm thinking that the market is going lower. If not, then it probably will be reaching on the higher sides and reaching through here. Okay, so let's see if the price do really reflecting on it. If not, I'm thinking that the price might be reaching on the higher sides. So you can see the price do really react from the 5 minute or the block. Let's see, is it giving us some kind of manipulations, displacement, and then internal to external range. Okay, this is really important. Let's see if the price do really reach through on the bottom sides. If the price do really reach on breaking through this bottom line, we actually can try to do shots again. But I think really good still have time to trade on. Okay, so let's see. Acting on, so we might be seeing the price going on the lower sides. So let's see. we need to see the price to break through. So you can see the price didn't give us a displacement below and keep on all the blocks. So a really good time to do shorts. So if we want to do shorts, we need to have confirmations. We need to have the confirmation is the price do really going low. Even though you can see that the price has been testing, but didn't displace below. So because of that, we can't do shorts. Okay, confirmation is really important. So if that really happens, then we can expect that the price has a chance going back here, to be honest. So this is might be a market maker buy model and reaching through here. Let's see how it happens. Okay, but if the price do really disrespecting on this, we might likely to see the price to reaching on this level. So if you are doing short term, I'm thinking that doing long might be beneficial in the short period of time. Okay, so I'm thinking that the market is going higher because the price is continue reflecting on here, displacement, order block, and also testing on this order block. So I'm thinking that the market is likely to go higher and reaching through this area, going back to this area. So I won't be doing short right now. Okay, so really understanding the okay, then you really have a beneficial. What is the momentum right now? Is it going a bullish momentum? When is the right entry? When is not the right entry, and so on. So if you really want to know more about it, please press like and subscribe our channels. Please press like and subscribe to our channels, and we'll be continue to giving you much more uh, details about the analysis part. Okay, so please do really enjoy our trading. I mean our live streaming. Okay, so let's talk about the the summary that we have been talking about. Today we have been covering a lot of things. Okay, one of the things is that we have been what is happening last week. Okay, last Friday, the PC price index. So the inflation has been dropping down. So people has been speculating that the Federal Reserve will be cutting rates, 50 basis point rates. And causing by that, we can see that dollar index has been dropping. And this is one of the factors why that the gold market has been going higher. Okay. But from the data has been showing that today the SMC wash through the people is much more likely to 25 basis point rather than 50 basis point. Okay, you need to know that this is actually um quite keep on changing. Okay, it's keep on changing, so it's not a really good tools to watch on. It's not a really good tools to watch on, but this will be likely to affecting on the markets. Okay, so Going back, we also mentioned that what is really important, as we already mentioned, Federal Reserve is much more focusing on the employment sides and also the inflation sides. Employment sides is really important because employment is likely to affect it because has been maintaining high inflations, maintaining high interest rates. So the employment has been likely affected. The unemployment rate will be raising to 4.4%. Not today, okay, not this week, but it likely in 2024 will be reaching to 4.4%, and the job demand will be going lower. So dollar index in the longer time frame will be going on a downtrend and doing long on the commodity currencies such as the AUD pairings, the New Zealand pairings, and also the CAD pairings, which will be much more beneficial. Okay, other than that, lastly, we'll be also talking about the currency strength index. From the currency strength index, we can see that the New Zealand pairings, AUD pairings, and also the CHF pairings is really strong. Okay, really strong. So recommendations is that doing long on the AUD pairings and New Zealand pairings and CAD pairings, and try to do shorts on uh the the safe haven currencies such as the USD, JPY, and CHF. Okay, right now it's definitely on CAD. So if you want to do shorts, you can try to do shorts on, I mean, do long on AUD CAD, New Zealand CAD, or maybe even, yeah, AUD CAD and New Zealand CAD should be fine. Okay, okay. So this is what we have been covering out, and we also have been doing trades together. Oh shit, we didn't expect that happen. Okay. Hey, but this one is actually a good one because this is really showing signs of going on the weaker sides. The price has been eventually reaching through this and going on the lower sides. I didn't expect that, to be honest, because I'm keep on focusing on the 1 minute time frame. Okay, you can see that the price do really reaching through this liquidity area and then has been dropping on the lower sides. It seems like the price is definitely on the lower side, so doing shorts is much more beneficial. This is really giving us a good confirmation. So right now doing shorts will be quite good, but you will be getting a little not too good R&R, so I will be probably waiting for retracement. So yeah, so overall, this is what we'll be covering today. So if you have any question, please do leave the comment section below. If you do really interested on our signals and on my analysis part, we have a lot of things. So please join our free signal group and we'll be seeing you guys tomorrow. Okay? Okay. So I'll be waiting for another 2 minutes. So if you have any questions, please do ask. I think I won't be doing analysis from the Euro USD. I'll be giving out tomorrow. So if you want to know more about it, stay tuned from tomorrow, my analysis part. To be honest, I really like trading Euro USD because Euro USD giving me a really high R&R. So last week is this. Even though this might be some losses, but I really like trading Euro USD too. I mean, much more trend, to be honest. Comparing from the gold market, it will be much. Sometimes you might be manipulated by the markets, but Euro USD is not likely will be manipulated. Even though that the volatility is much more or less comparing from the gold market. So, for example, the weekly volatility on the Euro USD is about 100 pips. Comparing from the gold is about 40 or 500 pips. So it's about 4 times or 5 times. So it's likely to multiply. Okay. Okay. So that's all for today. Thank you for listening, and I'll be seeing you guys tomorrow.